Yeah, and we have PayPal, Roku, Qualcomm earnings today with a couple others.
It's
DoorDash.
crazy to me how they haven't come up with something better than PayPal, or PayPal hasn't like bettered their own service. You know what I mean?
Yeah.
With so much money, but they're just like, I don't know, janky.
Yeah, Roku could have a big impact on the market. They have before. I'm not sure how much they'll have
How is Roku
now.
even legal? Like, it's a public company, but Roku prides itself on, isn't it bootlegged TV channels?
I don't have a or
Because it's
I don't use it. I think I might have it built in some TV stuff, but it's like it's actual TV, eh? Watches
yeah, I thought Roku
anymore.
was like, remember with
Strange.
those Android bypass things, you could look up any TV show and just watch it.
Ah,
I thought Roku started out like that, and then all of a sudden they're a public company.
yeah.
It like that's right up there for me with like Uber. You know what I mean? Like they have like no actual assets, just they use other people's vehicles and they're worth like $1 billion. Like their whole business model is just a program. Got 100 people sitting in an office.
Hmm.
I guess numbers came out for Starbucks too, and their storefronts only make Starbucks like 15% of their profits.
What else? Is it making coffee? Selling coffee?
Uh, Most of their profits come from all of their like consumer goods, like when you go to the store and you buy like Starbucks coffee or something like Costco or something like that. All their cups that they sell, and what was the other thing? Right, their app acts as a bank. So the
Interesting.
Starbucks app, people load their money onto their quote unquote account, right? Um, but they reported since they opened up their Starbucks uh, app or whatever, people loaded money into it. They've got like 10 or $15 billion liquid on that app. I'm just
Interesting.
assuming they use it for investment purposes.
Broke the trend pretty decently here.
Yeah, I was a bit sketchy about that one. I mean, like, earlier on, I was thinking we could still come down to pick the big ones, but then we consolidated. I was like, no, that's turned into a is it an descending triangle? What is it called? I
That
can't
that one's
remember.
that's a falling wedge right there.
Falling wedge. Sorry, yeah, falling wedge. Sorry.
Essentially
We
the
used to call them the same thing.
Yeah, yeah.
well, descending triangle is a flat bottom triangle. I call it the flat bottom triangle because it is descending, but so is this.
That triangle's been a little skeptical over the past couple of years, though. The descending
Mm.
triangle,
Mm.
the falling wedge hasn't really been playing out anyway. So
Yeah,
they're both kind of hit or miss at the
but
moment.
it did this one.
Yeah, yeah. I'm
That's
just
about
saying,
it.
like comparatively to a couple of years ago, like falling wedges were playing like right away and fast.
Yeah. And also, like, at the beginning of the day, like Super was talking about, the first thing that happened was a Head and Shoulders fail.
Hmm. Yeah, I wasn't liking the setup. I didn't think it was going to work, to be honest. I was just waiting out, and I was like, yeah, there we go. I need to start trusting my own judgment. I swear to God.
Yeah. And we got this point right down here. See, there's a little bit of a gap there. Even to test the upper part of that gap. It's definitely giving me the free drives vibe. As much as these fibs are like underdeveloped, I think that we might actually be more interested in testing them from the upper side future. Kind of like what we're doing with this 188-200 here. Like if you think about how it's actually using this, it's not very good at all. Like it's not effectively bringing it to the level that it's designed to. I can see that they're going to lead on to that and might continue into the squeeze. Now remember, today there's an important event.
I feel like I'm running out of time. I gotta go now. 25 minutes. Damn.
Out to work, yeah.
Yeah. I'm not really seeing anything too crazy right now, or anything I wanted to take. So.
Well, it's a lot of it. A lot of it's going to be anticipation for the actual event coming out today.
And nothing I can quit my job over today.
So with that B point being hit, we can go ahead and we can take some emphasis off of that for now, and some emphasis on like this level up here, and potentially after a short pause, this one. I can't help but notice that the way that we pulled back twice inside of the 5-wave move was very similar, and we're doing something different here now. But this move was smaller, and this move was bigger, and then it led to a big push. And then this move was smaller, this move was bigger, big push. And, you know, these two, they're roughly the same size. They lead to the same kind of endpoint. So that's intriguing. Now we've created a small B point in here as well. We can see that it's come from an M into a W into an M again. So fibs can be applied. We only responded to the 161 on the last fib set before we're coming back to the 100. In this case, it might be a little bit different. Everything ends with the break of this line. Really identifying the range. I think we're gonna get a test of the blue line from the underside. Pretty hefty move, clearing everybody out of the range. A third drive has been created as well, 3 consecutive lows. At a high point though. And effectively it's managed to create this environment that I was talking about yesterday that I posted. With the W. And it even had this blue line cutting through here, except our blue line today is a little bit lower and could actually prevent us from getting to the B points. Notice that the VWAP was cutting through the B points here. And in this time, it's actually taken longer. And curious if it was even lower there. Basically, the first of the 3 lows becomes an intriguing target, as well as the other ones. Those levels I've just marked as a red zone and a gold line. They're basically obstructions, like target levels that we could end up sending us back to this point. And this reminds me a lot of what's going on the hourly. You can see that it came back to test the 261, back into the range. That same kind of spike out of the bottom we could see out of the top by the end of it as well.
interesting how I didn't get that green zone at the top there, and we're going for the blue, or sorry, the red.
Well, the thing is, that's a range down below that used to be used like this.
Okay.
So it's kind of stuck in between. Like getting involved with these ranges up here, because like this used to be a giant gap right here, that gray zone, and then it was how it worked was this was like a channel here, this was like a channel here, and this was also a channel up here. We've got some B points still in between the channels up there, so I do think we'll see those again.
What's interesting too is if you take the fib set to this M, the B point is roughly the same amount, or is at the same like fib set. Like remember how it didn't reach the 261 when we were going up, and Matt there was wondering if it was like a 227 or something like that, but it was just kind of like awkward.
Well,
We're
yeah.
around the same spot to that B point.
Well, it's interesting that it's a 161, and the last reversal that we had was actually a 161 here from this B point. And it's strange to actually see the 161 in action so much, but it is a 161 caused the reversal to this B point here, and we're at the 161 to this B point right now. So like all 161's to do with this little consolidation here. And the VWAP is right there too. That's the short-term VWAP. The basically the mean. It's working like an anti-volatility entity right now. Yeah, the major fibs can be reapplied. Yep. The B point's at the 227, and that's where we reversed at the major high. So this B point right here, it's 227. This B point right here has a 227 at the other B point's target, or at the other pattern's target. And a trend has been formed now too, right at this point here. Yeah, the blue lines are of interest as well. Pretty major acknowledgement of the view app there. And of the red zone. Of course, the B points barely missed. The view app's likely to be seen again as well. a new trend can be drawn. Very, very small. At the end of the day, it came back to test the upper node, somewhat of a phase A, kind of like it had a preliminary support, a selling climax, automatic rally, secondary test. And I'll show you that as a schematic. So preliminary support, secondary test, automatic rally, or sorry. Preliminary support, selling climax, automatic rally, secondary test. And we did all of those things in here. So you see the similarity. And then it's following suit with the next major move. Could lead to a new low that grabs the B points, so we have to be aware of that.
And look like a fourth wave.
Yeah, very well could be. After all, it's right near the B points of a relatively untested B point, and it's also the fourth wave to a bigger picture 5-wave move that we're returning to. Like it went 1, 2, 3, 4, and 5 to make the highs. So we could just be doing our 3-wave move down. I can't help but notice that on top of the red zone, there, we're consolidating, and it's like this motion basically. We saw this at the end of the day yesterday.
Is there another volume node below that we can jump on?
Well, there is the fourth wave,
Oh yeah, okay.
kind of like what we're testing right now. Be roughly around the 61. Yeah, we're just testing the 61 right now, and all the B points are cleared.
Potential third drive if we can make one more.
Well, yeah, I mean, it kind of has one going on here. And I've noticed that when they're positioned really from the high, they can take a little bit longer to get back to, because this was actually a first of the three, and it's never been tested. So it might decide to actually go and get that when it breaks the trend.
I was just looking at the last two since they were somewhat the same size.
Yeah, yeah, which means that it's kind of like a return back to a triangle in a weird way. It's kind of like this is the spike that came out of the bottom.
Oh yeah, okay.
Yeah, I wouldn't have thought about that if you hadn't mentioned something.
Weird how it lifted off at 241.
Yep, yeah, the high was a 227. So it's like basically just getting short of the 261. So far, it's been capable of reversing to the B point. So that could mean, and what's interesting about that is the B point has been the 61. And will it still be the 61? Well, that one, yeah. The B point pretty much is the middle of the B points up there, and puts a lot of emphasis on that level right there. Right, that's for sure. 188, 200. Only ever had wicks and spikes past it. Blue lines are still very close by. Thing is it's still the case that the fourth wave was this size, and what we're doing right now, not quite the same, but we do want to look for any similarities that we can find. Very triangular at this point. Good thing about it is it's coming to an end. Should be looking at getting outside of the triangle so that we can test it from the outside. The blue line. Watch for the return of the triangle. Can't help but notice that this is roughly the distance that it made out of the bottom of the original triangle. So basically don't drag your stops above it. What's up?
Sorry, how much higher overall are we looking at getting here? Because there's another B point above, like
Yeah,
what,
yeah.
100 points up.
Yeah, totally. Like if you look at the long term, like we're not even really scratching the surface of what this move could develop into. Like the first of the three lows getting hit, and the entire downtrend breaking. I like the idea of being in for the downtrend breaking. This is a B point up here that I think hasn't been tested. 15,000. I like the idea of 15,000, getting back to 15,000. And like I said, no stops are safe outside the triangle, as they could all come back in this kind of move as we advance on that slowly but surely. Both of the blue lines are now hit. Now we've got some little B points down here that it could be interested in, so So all the targets are now hit. And then watch for the return back to the triangle. And all the blue lines were hit as well. Blue lines can work like barriers. Obviously make it safe if you're hedging. It's basically like a scalp. Notice that the VWAP caused a slowdown as we hit it here again. Ultimately, it all leads through the red-yellow line above. That's the tip of the triangle exactly. Specifically, just to test the triangle. Only went up to test the blue lines. When it was done doing that, came to test the triangle. And it's not something that will always be this way, but it was the appropriate way for it to be this time. And then, of course, for it to lead to the red-yellow trend break finally, and to the highlighted area. Basically, just happened that gap right there. You can see it filling in as it's chugging through that gap, kind of. It's trying to add volume to the side. deepest part of the gap there. You can see it's filling in. There's the B point. One of them. Take a look at the 61. It is prone to having a little bit of a negative response to the red yellow line. We can see the blue line below. Basically this B point down here, we can go ahead and just put it over here. We're at the 61 right now. A little bit of a negative response to it's acceptable, but
I just took profit on a couple contracts, got 3 left.
nice.
Haven't made any bad trades here, like this week.
Nice. You can see how it's lunging back towards that blue line, lunging back towards the target there. Negative response to the red yellow line as predicted. Doesn't mean we won't break it though. Just good for understanding the counter trend moves, and if you be part of them, then that's a bonus, but doesn't mean give up your long trade.
Hey, morning, Hanky.
Yo,
What's up, man?
there's that smaller B point right there. Change the hour. the VWAP. It's almost like S wave completed. I admire all of the B points getting hit on the way up as well. We've got a little bit of time between now and the red yellow line break. A right shoulder could form as well. We have a inverse to a head and shoulders to make the S wave, and it's coming to an end. The inverse to head and shoulders forming. That's creating a new trend. See that trend breaking? Beautiful. People at the head and shoulders getting fried. Now remember, we do have the meeting today, so a little bit of an anticipation triangle on a bigger picture. Absolutely okay. This is old. Turn it down. But it's certainly in use. Just wanted to differentiate from the other one. Almost like the contraction that we found here, we can find in here, but except it's expanding. The red yellow again. Very triangular, wow. this movement and this movement separated the consolidation on the bottom and then one on top. It's been very common lately. I can't help but notice that the triangle that we had here was associated with this spike, and the triangle that we had here was also associated with this spike. This one was pointing inwards, and this one was pointing outwards, but both triangles had this move at the point, and it's a fact. I'm kind of intrigued by that. Very particular. Of course, we're just hovering around the view app. Nothing too crazy right now. We really put a lot of emphasis on that red yellow line though, having two major negative responses to it. Just before the V point. Certainly filled in the gap though. They might be trying to do it on something that we've seen already today. What about the W that leads into the bigger push? Like we saw. And could we do a W? We're only one move away. That's the interesting part about that. But today everything's about 2 p.m. so that's the point that volatility will increase.
Could be seeing this first wave again, same size maybe.
Yeah. Yep. Well, we're at the blue line again, also testing the high of this giant range again. Some new levels to consider here. One. Easy 15 points. That's everything. There. All those short-term targets are hit. Now we look for the long-term ones in the break of the trend. It may offer more short-term targets in the meantime because there's tons of space there. If it chooses to use it, that's possible. I mean, after all, we do have a report today. It doesn't have to be too erratic before the report, but on the report itself. Allow it to come back and test the white line as well. That's something that's very normal. Hedging might be a little uncomfortable. Just like that, beautiful movement. And it's like it's considering this VWAP that I have placed today. It's not not a indication that is just like spawned onto the chart like what many people like to use. It's something that has to be placed at a very specific point, and in order for it to be found valuable. New trend. It's like a 61, a little bit past it of the short-term move. Yellow line is not too far away. Also the fifth wave. We've managed to go 1, 2, 3, 4, and 5. Pretty controversial time, I'd say. It's also the POC. But it's trying the VWAP again. Of course. The fifth wave was truncated, cut off. That's fine. After all, there's much there. And it still could technically form, so we do have to be careful. The VWAP is a dangerous place to enter. After all, the red yellow line is getting closer and closer and easier to break as a result. Less of a move required. Less energy required. Less distance. the red yellow line. Yellow broke to the red yellow line. That's like, how many times have we seen that happen today? I've lost count. How many green dash lines have we taken off today? I've lost count again. How many days in a row? How many months in a row? Now we look at these targets. Interested in the 261. Everything ultimately to break the red and yellow line. It is now. This becomes a B point, so no stops are safe above it, allowing for it to test as key. Edging may be a little dangerous for it. The gap again. This time, if we make it through the gap, we could turn this entire movement into a W, and it can go from M into W. Simple. Kind of like just like what it did right here. M into W. Now we're retesting. We're coming to grab the short-term B point. There it is. And of course, if you're long from yesterday, the name of the game is just to find a hedge for the report at 2 p.m. So the upwards direction is already captured. You put the work in yesterday, and if you're doing it right, you're holding the extremes. Where we're at right now is just past the 61, and I think we're likely to come back and test it from the underside. That's what we're doing right now. I'm back to test that 61 from the underside. There's another point in here that is close to the view app on the other side of that smaller gap again. Be interested in putting some volume in that. Reminds me of the retest that we did here. Pretty hefty movement back to the low of the range. Testing the blue line from the underside is going to be on the table too. Got some other levels. Of course, if you're already long from yesterday, you're not trying to really find the upwards movement, but capture the downwards movement. Because any positions from yesterday still do hold. Anyone that expected it to go back up with AMD? And the focus for anybody that's not in is to be in for the break of the red yellow line. Fibs on here. Of course, getting to the break of the red yellow line is the only way that we'll ever be able to get to these B points. We cannot expect that they're even in play until we have a position that can get us through. We've got just over an hour till the report. The blue line typically get a test from the other side as well. I do think that everything we've done underneath this blue line we will see above the red, yellow, and more. But up into the report, it can be difficult for those that find value in being exposed to the red, yellow line if they didn't hold from yesterday. That's something I find that I can say about a lot of very important reversal times where it's like, oh, you're in for the first day, great. Second day might come back to get you on the fourth day, might come back to get you on the sixth day. But the first day is the extreme. And if you pass the people from that extreme, then we are not in that move anymore. And it will be a new move. But if this is the move from yesterday's extreme that could get us back into action on the daily highs, because just like we have on the short term right here, we have daily highs, red, yellow line coming right across the high. Just like this, right? So do we find value in being exposed in that? I'm like, why on earth would anyone ever want to be in for this one then? If you find any kind of value in being in for that one, why would you give up the trade if it's going to be the same situation on the long term? Doesn't make any sense. And it's inherently going to be more difficult every day that you don't keep it. But it doesn't matter. I assume everybody will pick the hard way and get out of their positions every single day and have to find a new entry every single morning. And that is the human way. But at a hedge fund, you'd get into trouble for that. But we hold ourselves accountable. So what's good enough for you? Is it good enough for you? So that's the question. Because it's hard. And it's easy to give the trade up when you're at a profit. That's what they want. They don't want you to have a big move. They don't want you to capture exposure to the break of the downtrend. And they want you to sell it as soon as you've got any kind of profit so you're not in their way when it actually comes down to a point where they're trying to squeeze out like hundreds of points more and it gets to an actually overextended point. They don't want you to be able to sell anything up there because they don't want to have to buy you out way at the high. They'd rather buy you out now, make it difficult for you to buy the position that you want so that they can buy you out at an even better price and then hold to your target. We see that every single day, almost every single day. 2023 wasn't the case in 70s or 80s or 90s, but Robinhood came around, things changed. Memes started happening. Market market respected the public a little differently after that. But we are here back at the blue line. Everything beneath it was bought back up, and every single person that was a buyer in this range that was turned into a seller has now been bought back out, and if they lost their position, somebody else has it. Let's see what they're going to do with it, because I think they'll hold it through the red yellow line. Just like the people that intended to have their positions in here and in here, Yet, because it's difficult for them, they might not find their way back in. Yet it is better because it's lower. It offers more points to every target that we have on there. Yet the individual will focus internally on how the market has affected them personally rather than whether or not they should be in at all. So it's very, very normal. I can see that it's down to a science that is understood by the hedge funds, and they move the market according to how the people will respond. And they're people themselves, but at the end of the day, they understand the human mind very well. And I can see that people go through a very similar process when they're learning how to deal with their emotions. And it's really hard for people to get into trading uh, and not look at the profit and loss because they're all interested in the profit and loss. It's like a you got to put the thing that you want aside in order to focus on the right way to do it so that you end up with the thing that you want. But if you focus on the profit and loss, you're not focusing on the thing that actually gets you a good profit. You're just focusing on, you know, the entire, like, it doesn't help. Like, but if you have a plan that actually gets you to the profit and then you focus on that plan, don't be surprised if you end up with your results. But if people just demand money and then just because they're at the computer, they are trading, so they should be making money. That's not really putting much effort in. But if you actually try to put effort in, try to, put the hard work that the market wants in, don't be surprised if you get more clarity. Don't be surprised if it's more seamless. You have a clearer plan. You understand more. It's less emotional. And the one thing that can ruin all of that is one word: quickly. Quickly. Because quickly means it's not thoroughly. And thoroughly is really important. And constructing something that is good for you because this is what you're doing, and you don't want to settle for less. And if it doesn't give you something that you want for a prolonged period of time, well, that's fine, because you're going to wait for what's good for you. And I think that there's a lot of value in that. And the more that you wait and the more that you find what's good for you, the more things that you will recognize, and the more things that you will be able to be part of. And that's the reality of it. And those things change. Like, I'll tell you, like, what we can do with a triangle nowadays is incredible. With the amount of volatility that we have in our current market environment, the people back in the 30s that we read books on and everything like that, they didn't even get to experience this volatility. So it's kind of intriguing to me. Like, a lot of the moves that form today, some of them can only happen on incredible volatility. Like, for instance, what happened on Meta's earnings with its this movement here. The amount of precision when it was at the low, and I wanted to see it double out of the other side because I knew that that's what its inclination was to do. And look at how precise it was out of both sides. And then it came back to do it later. Both sides, absolute precision. It loves making it both directions. And then it decided not to make it out of the other side, and we made that clear. And then it was all over. And it's like, to make it that precise on an angled trend, so even, it reeks of the institutions making their mark on the market, and leaving their imprint as a sign of their control, is what I've come to realize. Because they are in control, and they show that the public and their strategies are not part of those market movements. Because where does the ordinary person's strategy fit in when it's that precise? When it's constantly moving between patterns that do make sense and I can prove it. And at the end of the day, then there's what everybody else is doing. And it doesn't fit into any of this. So it's like really interesting. Where do they fit in? Or is it like the sharks and the seals? Like like literally, like, there's a big feeding pool for the institutions, and everybody just gets flushed out every week, but you don't learn from your neighbor when they lose all their money. You just see the same advertisement that, oh yeah, get into this, and then literally with no information, no training, no nothing, go up against the hedge funds. you know it's other people you're trading against, don't worry. But then the market moves with absolute precision like that, and Everybody's trying to figure out why moving averages and crossovers aren't working anymore, and why the cheat sheet on Google's failing. It's like the #1 failed patterns. Just type in trading cheat sheet into Google, and you will find all of the patterns that fail in 2023. Like all these ones. Those are #1 patterns for failure. It's very interesting. Like head and shoulders, we begin the day on failing those. Falling wedges, like what happened with this one? Because we did it earlier, and it managed to work out relatively well. Did it again? Why didn't the same confines produce the same result at the same level? It did something different. And that's the thing that people won't understand is that can be part of your strategy, but how do you know it's not going to do something different? And like I take pride in understanding that like I know the differences between the patterns, like it's not a matter of maybe every day. It's not a matter of coming into the market fearful, and worried. And that's what I see every single day in the public. When I look outside, I see just like it's like disarray. It's like when you see a bunch of sheep trying to figure out exactly whether or not they're in the right spot in the herd, and they're looking at everybody else, and I'm like, oh geez, like no direction, no nothing. They're just trying to find a news article to make them emotional enough to make a decision. And I'm like, that's terrible. And it's perfect for the hedge funds. It's very, very interesting to me. Because everybody starts like that too. Because you're not born with the information to be able to do this, right? You have to either learn it through experience or be taught it, right? So what's interesting is I think that it does take like versatility. It's not something that you can write down and program into a robot. It's like it's like you have to be able to analyze the environment and 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 find what's suitable and appropriate for that situation. As it changes and different patterns form in different environments, their results and their impacts can totally change. And they do not on a monthly basis anymore, like the 60s and 70s, but almost on a weekly to daily basis now. So what happens with the Head and Shoulders today might be completely different to what happens to Head and Shoulders tomorrow. Like we can even see today, there's a few Head and Shoulders today, but they're all kind of wacky. Like this one here, this one here, this one here. What we're doing right now, it could be like this, which is a pattern you will not find on Google. And it's a high with a higher high and a lower high, and a low with a lower low and a higher low. And that's like, something that it can do when it's in the business of making a Head and Shoulders to an inverse Head and Shoulders. We've seen that there's actually multiple different ways that it can do this. Like this is what it usually started to do, where it would make a move like that 8 times it crosses the middle, and then we've got 1, 2, like this, and then you can see it's basically the same thing except it's separated by a middle uh, move. Oops. And then we've got the all-in-one that I think is what's forming right now. Basically, it's a ploy on making sure that anybody that's trying to buy that sees value on the upside, they clump them all up into the range, They get a bunch of people, ordinary people, all the mutual fund buyers, everybody like that, and then they get their stops all in the same level like that, and everybody's like, oh, I'm long, I'm gonna try and sell it higher somewhere, and they have their stops down here. Every single person clumped up into one easy to grab order. Institutions just come down, grab everyone's position. Now, all the people thought that this was a good deal. This, oh, even better deal. Now they come and grab everyone's position. They come up and they hit everyone's target without them. Now, why would the market do that? Why do we see it every day? Every day. And I'm like, well, you know what you can see inside of this environment? Cheat sheet patterns. Like basically anybody that just takes a trade for the sake of trading, they're going to land in there, which is a lot of people up until this time of day, where we typically will go sideways a little bit, and then that'll be the nail in the coffin for a lot of people that are on the fence about this move, especially people that are fighting it back. Like, let's say, for instance, they lost money in this middle area. By the time that they get back to this middle area and they see break even, you count them out, guaranteed. At least, they might be in still, but they're going to have maybe 70% less of their position. They'll be like the one contractors or something like that, which is normal. And it's come to understand that this is human. Many people fall for the same problems every single day. And what is danger, and how do we avoid it? It becomes the question. And are the same techniques to avoid danger in reality, and to make sure that we're aware of our situations and we have situational awareness? Um, like, what is the value of that in a dangerous environment? Well, being able to see the danger, understand the danger, deal with the danger is way better than avoiding the danger. Because if it makes the best of you, then you lose money. And at the end of the day, understanding exactly how you can maneuver yourself around that danger because you understand it so well is the one thing that I'm with 100%. I don't like and I'm not for 2 seconds do I say that it's easy. Like that's the one thing, like I hear all out there, and I even see a trading commercial. Like they try to make it seem like the guy's like pushing his hands into the sky, like he's like, oh my goodness, emotions just bursting out of his chest. I'm like, geez, that's how they want you to be. And it's like, it when you're acting like that, it means that you've taken every single moment or every single bit of logic and you've put it aside to feel. And that means that every single moment that you're doing that, other people are able to formulate their plans. And that could be time that's spent running over your current situation and understanding how your plan and your current situation can formulate into something that can benefit you or harm you. And it's like, instead we're feeling. And I'm like, that doesn't make any sense. Ineffective. So it's like at the end of the day, the more that you've done it, the less that you will feel anyways. And you'll come to realize that it's not part of making money to feel anything, but to actually do it right. Like when you were sitting there at a math test in grade 3 and you didn't know all the answers, you would sit there feeling terrible because you knew you wouldn't do it right. At least I did. I was terrible at math, and because I didn't want to learn it. But at the end of the day, when I did that, um, I also had some math tests that I really knew the answer to. I never every single thing, and I was like, I sat down and I was like, all right, this one I know exactly what I'm doing. I filled in all the blanks, and it's like you just sit there filling in the freaking blanks. There's no emotion at all, right? When you're doing a math test and you know the answers, right? You just fill the freaking blanks, and it's pretty much that's how easy it is, right? So why are we emotional when we don't understand? So what's the power in acting only on when we understand? And that's where I come from, you know. And it's through it being so difficult that I've come to this understanding. Not because I was taught this, but because I know what is on the other side of the fence if I think any other way. If I let a little bit of the slack go, if I don't keep it strict, if I'm not following my rules, you know, there's hell to pay. And I don't like that. Basically, that's the way that I look at it. And then, like, what is it to follow the rules? Just like the math test. Imagine you know all the answers and you do it because you're following a system to be able to calculate it properly. Why would you change that? Unless the math started to change and it demanded that you change, your math to get the conclusions. And sometimes the market will do that. Not all triangles will work the same way. Not all falling wedges will work the same way. And sometimes it's absolutely obvious why. And you can see exactly what we're doing right now too. I'll see if I can control Z it back into action here. Because I know I was talking about it. No, I don't think I can back in action. So we've managed to clear all these B points out. Now we've basically made a head and shoulders, and honestly the inverse head and shoulders has been struggling in this pattern for a long time now, but everyone can see that it had a high with a higher high and a lower high. Like this pattern right here, that would be a head and shoulders regularly, right? So if we go ahead and understand that, and then we look at this, it's like that right there would be considered an inverse head and shoulders because it's got a low with a lower low and a higher low. And this is a bullish pattern. This is a bearish pattern. And it's done both of them in this sequence. Remember, the inverse head and shoulders is the last pattern to form in this case. I mean, it puts a really strong trend in there that I'm interested in breaking, because that's what trends are for. They're for breaking. And or else we'd still be in the last one that didn't break. But it did break with the rest of the 5,000 trends that broke in the last 100 days as well. And then they say trend is your friend. And I say the next trend is your friend, not the current one. The current one has got less left in it likely than it had when you first found it. I'm like, why don't you want the whole thing? You want to get somebody else's like end bit of their profit? I'm like, I'm just like dying inside right now. I'm like, do you think that's the best way to go about this endeavor? No, 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 no. There is a best way to go about it, and it's to catch the very extreme and hold it. And there's no better way to do it than that. At the end of the day, the market can make it very difficult when it makes 11 extremes at the point that's the most attractive. And can you manage that? Well, it comes down to how you manage it. Do you have a strategy for when it comes back? When you've made some money, do you sit there and worry about it, or do you do something about it? That's like another thing. It's very, very important to get these things down, right? And or else it's hard because I'm like, well, we can make like it's almost like I can make it hard on myself so that it's easy. If I follow the rules so strictly, then it's easy for me, and I don't have to worry. I don't have to feel emotional. But I'm strict with it, and I'm like, well, that's fine. You're just serious about your profession, and there's no shame in that. And at the end of the day, it's only more respectable, and it's like it's only clearer. I feel like, okay, I say emotion does cloud judgment. It's louder than logic, at the end of the day. But when you're serious, you're not really emotional, I wouldn't like to say. You can be focused and serious for 100%. Like, think about like a colonel or something like that. They're always like serious, like at least in my experience. When I went to military school, the colonel was always like a really respected guy and stuff. And I was like, and he was always very serious. You always had to pull your shit together whenever he showed up. And and I had a lot of respect for that. A lot of respect for that. And I was like, I always thought to myself, hopefully that I could be as upstanding as that. This is a hell of a move, going for the break of the red yellow line, because those are the qualities that I admire. But he was serious about everyone else being better. That's what I liked about him. Like, everybody else was better when he was around. So yeah, I didn't know him too well. I don't even think I ever really had a conversation with him. Just basically looked at him. But yeah, some people do, I guess. But like, it comes down to a situation where it's like, where it's very clear that there's like certain objectives of the people that make the market move very, very strongly, and it's like it's good to make sure that we're as in line with that as possible. And sometimes that can take all day, and sometimes that can be a test of patience. Sometimes it can take a lot of discipline to do that. And it's like that. Another thing, once you've employed those I guess you could say virtues, like, and you've been patient and you've been disciplined, then you have something that you can feel good about, and it's authentic. It's not something that's just like the allure of making money, and thinking that it's exciting to be getting into trading because it's you know you're going to make money, but actually something, you've put in work, and then it's like, okay, you've applied that work to the marketplace has in turn respected your work, and you've profited off of it, and it's done, and you're out of the trade, and that's good. Then you're good to go, and then you can finish the day understanding that you knew what you were doing, and you seized your opportunity correctly, and the market respected what you had to do, and that's important to me. So you can see that the red yellow line broke with force, as it was difficult for everyone that is on the fence. You have to almost really want to be in with these people, right? That's the impression that I get. And don't forget that there's less than an hour that remains before this report releases, and exposure to the move on a report like this could be quite extreme. And the name of the game is, as soon as you capture that long trade, to make sure that it's safe enough to hold so that you can find a hedge for it. It's pretty straightforward. It's I mean, like, you have to come to the conclusion that it's the right plan to have. Like like it better be the right thing to be exposed to the red yellow lines break, and by the point that we're exposed correctly, we can put our stops all the way at the extreme low, take off enough profit at a time like this to make sure that it's safe to continue holding, and then hold the rest of it and close that, or not close it completely, but put it on the back burner and open up something else that you use to hedge with, and start focusing on the B points that are going to start popping into action as we continue. This one, I mean, fighting it now might be a little bit risky. We got a green dash line all the way up here, and we got an arrow all the way up here. So this one, I'm going to kind of dim it out a little bit because it's like, it's there, but it's, oh, I don't know why that didn't work. But go ahead and do that. Just like that. Go back to this here, at least. Exposure to the break of the red yellow line seems to be exposure to the largest counter trend move since we've ever made this red yellow line. We've never been capable of making, I guess we did make this move exactly. Is that not interesting? Well, it looks like we're making more than it now, but it is a point where it's very clear that we're running into a major gap, and any movement above this level could be very, like, it could lead to the other side of the gap. It could be violent, and we have to watch for it to be like in wicks and spikes territory. The name of the game right now is, when it goes up, does it get stuck to where it goes? Can we get stuck to the other side of the gap? Or is it going to struggle to get through, making wicks and spikes back to the high of this range? It is incredibly unsafe to drag your stop above this node. Okay, and it's not even a B point really, you know what I mean? But I'm like, I just don't like the idea of that. And I'm like, well, this spike right here at the bottom, that's a distance that otherwise could be used. And I'm like, well, maybe putting that into this would be appropriate, and working out quite well. Beautiful. Bought back up. right to the high of the range. Of the push that we're seeing right now could be very similar to what we did at the beginning. All of the push at the beginning of the channel leaves the same kind of volatility at the end of the channel. And it could mean the end of the entire area, the end of the entire environment.
28 for that B point.
Pardon?
I was saying it's the 188 for the B point.
Yeah, to the B point here. Okay. If you're in yesterday, then making an effort to make sure that you have a stop and profit on a short trade by the end of the day is key.
The high. Mentioned the high.
Beautiful.
Stop and profit.
That's it, man. That's it. So we do have a B point on this high here as well. Turn them up a bit there. But yeah, like you can see here, it came back to test the high. So I mentioned not to put any stops above that point. It's not a B point, but it's just something I had to mark there. And it's like it's tried to make that same kind of velocity in the spike that it had at the bottom. Also in this one here too, I do notice that. It still remains the case that there are two untested B points, the green dashed lines. And they're just before this major gold bar. That's honestly, it's very interesting how today and yesterday we both had the same situation where we were spending most of the time getting through a gold bar, except yesterday it was on a different chart. Yesterday it looked like this. Like deja vu though, really. Like tell me, hold on. Find it again. yesterday looked like this. Like I was like, every seller is about to be made into a buyer from what I can see. A negative response to the red yellow line is common before breaking it upwards, but I mean, every single person that was part of that sell, uh, all of the downtrends were just fake breaks. Everything was bought out again. That was one. And I can't help but notice that that one too. You know how that started? Is it started with a W and it ran sorry, it ran up, sorry. And did it here. Ran up too. Like that same kind of W was the cause of the dump. Well, it was the cause of the run actually, but it's ironic because that is a bearish pattern and its destination is to get back to that point, and that's exactly what it did. And in this case, it looks like it did the same thing. Like, is it not true that that point right there was also hit exactly? And it did do that. Now it's funny to me to see that it does it again here and it has trouble to hit that same B point. It's even higher than it was before. But what we do have here is a 5-wave move, 1, 2, 3, 4, and 5. The 5th wave hasn't really developed itself much yet, but it is clear that it does have an uptrend. The uptrend can be applied, and it kind of looks like how we would usually have a symmetrical triangle. Yet this symmetrical triangle seemingly doesn't have any interest in coming back to test itself as of now. Whereas it's incredibly common for symmetrical triangles, like the ones we see here, to make an effort at coming back to test themselves, whereas this one seemingly doesn't care. And could it be that perhaps within this trend, when we make symmetrical triangles, it is the case that we return back to them? And with the trend broken, that could change? Because God forbid it was because of that trend that it was doing that thing. Without that trend anymore, maybe it does the thing of this new trend, because it is a fact that that trend did break and we are in a new one. And it can have new characteristics, and we could see those here. But there's not much of that trend yet. So what characteristics we can see uh, are pretty minimal. But I'll tell you one thing. What we did originally with this inverse head and shoulders to head and shoulders, that ended up playing out the inverse head and shoulders. The low with a lower low and a higher low effectively sent it up into a higher move. Just like originally the high with a higher high and a lower high was able to send it down only until it uh, made a right shoulder basically. That's fine. At the end of the day, we can see that the 188-200 has been tested twice now. We've got a green dash line that's coming down from the high there, which honestly, it's one of those levels where it's like if we're not breaking out to it, we're going to break out through it. If we break out to it, it can work as a resistance barrier temporarily until we get on top of it. But I find it inevitable that we will get on top of that green dash line today. So, what's funny about that too is it actually has to go down to make that not the case. If it doesn't get on top of that level, right? That means by the end of the day today, it would have to be right here. That means in order to keep this line, it has to drop 50 points. And now, I mean, if it manages to drop, the more time it will buy with that area. But the one thing that's interesting about it is if it gives up most of its progress to that green dash line and then gets it at a point that's not relatively high, it could break out through it and actually give us something like this again. Because the break of the last trend and the continuation, we have a lot in similarity to what we did when we first came into this area. We haven't moved like this really in this direction, in the upwards direction, since we really started it. And it's kind of interesting that this is how we're ending it. And funny enough, like when I look at that more and more, is it not true that this big move here it ended right at the beginning of this channel, right? like this channel right here. Like if I make that into a channel right there, and you can just see basically how it was channeling. This move came into it, and then this move came out of it, but look where it ended. It ended roughly at where the other one began. So what's interesting about that to me is the fact that this entire movement is just something that ends up right where it begins in every single case. Like it's just like an N wave. So we see those a lot. Another major consideration is the fibs from the very high to the very low, the 61% retracement. We can see with absolute precision the 61% retracement of this entire move was the high. And it was the peak, like the deepest part of the volume profile. We can see that that's all in there. All momentum is relatively centralized as we're here hitting the B point. We can see the 188-200 led to the B point down below, and in turn it created new ones, this one above, and a new trend to go along with it, which ironically is very similar to the trend that we just had. And just like the W that we had before, when we came back to that point, we finished the pattern. At this point right here, it seems that we've actually come back to that same kind of point that the other one felt comfort in as well. In a very rudimentary analytical method, basically. Yeah, analytic. Basically. Same patterns that we've seen earlier can be seen in the smaller consolidations here. Curious about the expanding one as well. Even the angle that it used on the high, see that that was very predominant. It was already familiar with in the past. The consolidation that we have right at the bottom could also be considered as something that was capable of moving the distance of the triangle itself. And that distance, it's not just the triangle. It seems to be that's the distance of many of the consolidations and the time that it takes to make them. And what we've done here, even is one right there, essentially the average counter trend pullback, almost done double. D point up in there. Fibs are smaller, but still valid. The 188-200 got a lot of volume. Wicks and spikes past it. What we have here is almost like potential for a fourth wave. Very interesting. The red yellow line never really got a retest. Could that be the value of the fifth wave? I think this trend, it breaks like crap. So I'm trying to like take the emphasis off of it a bit. I think it's on the brink of a breakout, to be honest. Getting out of this VWAP could be quite violent. Good. At the end of the day, it's half an hour until the report. Any positions that are taken from here until then are directly exposed to the event and should be actively managed and protected. Yeah. That's a small one in there. The idea that take this range and double it. Like another small sneak peek of exactly what could be in store for the green dash line above. Because that green dash line is basically this channel doubling. And this one, I mean, it struggled greatly with the initial break of the red yellow line. Anybody that captured exposure to the direction of the break of the red yellow line was put under a lot of pressure before the actual break. Like I was saying, it rallies everybody up together and gets them all into one big heap and then stops them out and then gets to their target, right? That's exactly what I was talking about before and exactly what it did. And what we could be interested in now is trying to rival the highs that we've forming and providing a spike out of the other side. Because one thing that we like to do is, especially today, is make spikes out of both sides of the consolidations. We've got a spike here, and putting it on top would that equality that it's been striving for all day. Like even with the smaller ranges, the idea that it's made, an effort at spiking on both sides, even in here, you can see that it made an effort on spiking on both sides. Sometimes it's not particularly even, but the fact of the matter is that it does choose to spike on both sides of the consolidation, sometimes more clearly than others. Sometimes the movement that we see on the high can be inside of the spike itself, inside of the range itself. Yeah, it's beautiful though. Good movement today. We're going to see a hell of a lot more movement soon, too. Very excited. Because this volatility is very, very low right now. And it's because of the anticipation of the upcoming event, which is in half an hour, 29 minutes. It's kind of giving me deja vu to what we did here. When we set up this original red-yellow line, it's like imagine this is the red-yellow line here, but on a different scale. And it came up to it, right? We formed the red-yellow line up here. Like we formed the red-yellow line here. And then it came away from it and smashed it and smashed it. And it came away from it and smashed it. Smashed it. It did the same kind of idea here and smashed it. But then what did it do? It went lower than where it came up to smash it. Went lower. And then it decided to break the trend. And if it goes through the exact same sequence, it's not really that much movement, but I am curious to see what it chooses to do. It's not a great place to trade it because it's in the middle, but good place to monitor, that's for sure. So a 5-wave move is the current situation. We've got 1, 2, 4, and 5. Essentially what we've been seeing throughout the entire day. A lot of 4 and 5-wave moves. Funny enough, the 5-wave moves that we've been seeing have been notorious for coming back to the second of the three, like in this case here, 1, 5, came back to the second of the three. And we've seen that in other cases here too, like doing this one here. 182.5, but undeniably the second one was something of an interest to it. So we can see that the original red yellow line that I had on there, this one at the top, that one managed to break and then get a retest, and we're retesting from an even low. The fifth wave on the short term is something that's known to put some stress on the top line. So what I'll do with this old one is I'll actually make it orange because it's used up. It's not really in play anymore. But it is the case now that it's not breaking out to the green dash line. So the green dash lines become levels that can honestly propel it in the opposite direction once we get to them. And what's interesting about those lines is time is working in favor of us getting to them. Like I said about the other lines, how hard would it be for us to be underneath this for tomorrow? It'd have to be very difficult. We'd have to be down significantly. And of course, the report is coming out soon, so centralizing for that report's pretty normal. Ensuring that every single position has a stop that is safe and in profit. I would suspect that no trades have been taken from the middle, so should manage to be able to protect them. Yet there's still enough time for a few patterns, and there's enough time to break the red yellow line and return back to this node area here, because basically, this is where the volume begins. We've kind of went outside of the volume like this much. Like that's what it feels like to me. You know what I mean? We like this area in here. We've spent a lot of time and volume. You can see that the volume it protrudes out into that area there because it spent so much time there. And everything that it's done outside of that area, as you can see, it's come back as quickly as it's left it. That's a fact. So it's like we can look like it goes way back, right? At the end of the day, it's because of all of this centralization that we have that node there. Now, of course, that process and every single thing that we see here will come to an end with the end of the channel. And that's basically going to happen on the report. I find it very unlikely for us to remain in this channel from the change of the hour. You can see it's really making that effort to try and get back into that juicy volume area. The fifth wave playing out back to the fourth as of now. Not too crazy, but the green dash line is getting closer and closer. And just like the old red-yellow line, make this one orange as it's broken. Completed its break. We've gotten on top of it. Now we're at the POC and trying to get up to the line. See that there's a little bit of a gap there actually. The high of the node is where we currently are. Would we be interested in making an sudden shoulder? So basically in ranging that node, it has made like a right shoulder retest, basically making a low, the lower low, and a higher low. And now we're back to this point right here. An inverse head and shoulders talking about. Same kind of pattern that was here. Low, lower low, and higher low. The green dash line. And now a new red yellow line can be applied on the top. Exactly as intended. And like you can see that same kind of movement that we had in this area here, where we moved into the range, we could potentially move out of it a little bit harsher, like we did in here. Negative responses to the red yellow line has been incredibly common, so making sure it's safe by points like this is key. So negative response to the red yellow line, just like I said, exactly the same as we would usually have. We're turning the green dash line into a support. I'm gonna make it like a solid green line, and it's gonna be used a little differently now. I think that that's gonna be part of what spikes, and basically we could use it like a blue line, but ultimately I think it's turned into support. This movement that we're in right now reminds me of how we've done this in the past. Anybody that was part of the exciting blast gets overlapped. Anybody that found value in being in before the trend break. So we can see we got back on top of the line. Everybody from inside of the channel before the trend break, still safe. Of course, the trade made profitable at the moment it hit the green bar, but the negative response to the red yellow line has come to an end. It looks like we are retesting the most recently broken uptrend, but I made it that color because I said that that line would break like crap, and it's broken twice now. The red yellow line is the one of interest to me. Of course, the B points and the green dash lines that remain above. Make it into the gold bar as well. Put in a consolidation in there, could be just as we did yesterday. Same kind of deal. I can't help but notice that it did make a head and shoulders to inverse head and shoulders again out of this. Like, it's very intriguing. You know, we can go ahead and make it this pattern so many times, and like it pulls off a head and shoulders and an inverse head and shoulders, and then it grabs the idea of making the head and shoulders, but then leaves on an inverse where technically it didn't stop the sequence. I think it's going to now and fail the head and shoulders. But because this pattern right here is supposed to send it down, and I think it's going to do the exact opposite of that right now and go through the. But at the end of the day, the report's coming out in less than 10 minutes, so keeping long exposure is necessary. If you have the hedge from the top, that's great. But if anything, make sure that all the positions are where you want them, your orders are where you want them, and making sure that everything is the way you want it for the report. Not to have any like open orders hanging around the area that potentially could get filled and anything like that of the sort. Now, of course, here we are at the next green dash line. It's ironic because we're not any higher than we were when we first lunged towards the green dash line to begin with, but now here we are trying to break it from a lower level. Perhaps that's easier than breaking it from such a high on such a big run. But having a consolidation allowed to boil up some uh, momentum in that area to be able to get us to that green dash line. Now, of course, it wasn't a breakout to the green dash line, so breaking out through it could be on the table. Now, of course, we can see what we did with the last green dash line. It broke out to it and through it, but then ended up paying the price. Because that amount of movement, without any kind of consolidation, amounted to every bit of that exciting part, every bit of that new trend being taken back. And only what was left was the, scary end bit of the previous consolidation. And something like that may be happening with the bigger bar too. We can see, of course, the bigger bar came in as a larger run. Could leave in a larger. That's attractive. Just like we did see on the short term with the smaller bar. Very very similar kind of momentum and such to the. I would say this area down here, it's been remarkably good at making sure there's no B points. That I can say. Up here, it made B points and it tried to get them, but I can see that where it decided to go to was a level that wasn't the other side of the gap. Well, it basically raised it, and it certainly never tried to get this one up here, and that's inside of the gap definitely, or inside of the node definitely. So those are levels that, even though it's controversial that it might have been hit and so on, I do find that level pretty significant. Now, of course, what we do have here is a triangle, and it is appropriate because of the upcoming earnings, or not earnings, but report. There will be earnings today, Roku and PayPal and a couple others, but they're not as incredibly impactful as you would think. None of them have been very good. Yesterday was really good on AMD, but it wasn't for the people that were trading it in the moment. You had to hold it in order to be exposed to it, which is fine. Short term, it looks as though we've made a 61% retracement. $61 as we can manage to hit it, and it's ironically back to the line that was supposed to break like crap. And that's what it did. The irony is the relationship with that line has to come to an end within the next few minutes. If it's to stay inside of the triangle. And anything that it does outside of the triangle is subject to trying to come back to the triangle by the end of it. So that's one of the characteristics in this environment that triangles have. And of course, any stops that are dragged within the triangle are subject to being immediately stopped out on the release of the support in 2 minutes. The 61, a powerful stepping stone to the red-yellow line. Red-yellow line, which is just the high of this symmetrical triangle, but a very significant trend from a very from the beginning of the dump. And in breaking it, characteristics that are contained within it can come to an end. Of course, many characteristics can come to an end just off of the volatility we can get on a report like we have today. So you're able to take some off any long trades that have been acquired, and if you're not hedged, you might want to consider hedging. But making sure that you're hedged is safe is good. You know, returning back to the tip of the triangle could be on the table. Of course, we've hit all of the targets here. Any orders placed at those targets are filled. The gold bar is hit. And any hedges taken are now profitable. Back to the tip of the triangle, just like that. And consider taking profit. So why did it go exactly to where I wanted it to go and then return right exactly to where I wanted it to return to? Because the market's supposed to move a certain way, you could say. Now, holding the hedge is imperative. Making sure that you have something is key in the event that it decides to make more of a move down. And you only are short looking for a hedge is also on the table. Ranging the move, so basically using this node is what we're doing right now. And if anybody managed to hedge that, then you're fine. But if you're in from yesterday, you don't have to worry about going long anywhere because you're already in from the best price. And if you're just shorting from today's highs, you want to be finding long trades that can get you through that gold bar. You know, like I'm a firm believer that, you know, we buy everything out. It's just hard for them because the people are in the way. But not by the end of the day. And what's up with the 161 today, eh? This is another point at which where we could see maybe a retest of the red yellow line. So no stops are to be dragged above the red yellow line. Beautiful movement. That's it. Why does it do it? It's like magic. But I don't decide whether the market gives me signals. I just know what a signal looks like, and that is one of them 100%. And it's definitely screaming like you're crazy to sell. But you know, if you have hedge positions keeping you safe while there's downturn, while you're holding your long core assets that you want to keep through the highs, then you're doing well. You're in the right spot. You're on the right team. Regardless of what they say about the report, I see how the market moves. I understand how the big money plays it, and being exposed from the bottom, hedged from the top is the best way to be. And there's many opportunities that provide short-term profit targets, even just like coming back to the red yellow line, getting your stop and profit on a hedge, taking some off at the actual target. It means that you're safe to continue holding that long. You're safe to continue holding that exposure that is oh so hard for everyone else that's just holding long. You know, they'll be lucky if they don't get stopped out, but you can keep your stop all the way at the extreme because you're hedged. You don't have to drag your stop up into the middle and get stopped out like everyone else. Because that's what happened to any order that was inside of this middle area. Doesn't matter if it was long, doesn't matter if it was short, they were all stopped, they were all filled. And that's the interesting part about it. It means that, you know, anybody that targeted that area was successful, anybody that traded from that area was unsuccessful. And it's like, unless they sold it when it was away, but I mean, that's hardly much time that it spent profiting those people, interestingly enough. Not that it won't leave this area, it's going to leave this area, but we're just waiting for people. You know, at moments like this, I wouldn't be surprised if the institutions tried to put pressure against it when it's going up and put pressure with it when it's going down so that they keep it centralized. Because 10 minutes goes by, the public will lose their power to unanimously work together. And their whole news impact effect and everybody unanimously selling or buying at the same time starts to dissipate as they all see that it doesn't really affect the market, that their news event is wrong and that what they think is actually wrong because it didn't move anywhere. So that's what we're waiting for. And then they leave. And then we move. This is the way. So we're getting ready to try and test the waters. We want to see when there's an order that comes in right now and it's an institutional order, we get a test of the waters to see whether or not if anybody's actually going to move or going to oppress its ability to move away. Now, one thing about this triangle is it hasn't really been even on both sides, so keeping the hedge for that potential distance out of the bottom could be one thing that is really attractive. But here we are, basically right in the middle. Now it wants to test the high of the triangle again. Got some B points when it crosses them, like on the short term, like it just creates these little levels like this, and it comes back and tests them all like as it passes them. They're basically like little B points. But I can see that since we started this trend, the majority of the movement has been taken back on every single movement before any advancement. And I cannot help but notice that that is exactly what we've done again. The high of the triangle, though, is aching for some love. We've got the green dash line. There it is. Eye of the triangle. They knew they wanted it and they got it. At the end of the day, the triangle inevitably is going to end, right? Okay, so like there's enough time in the day to end the triangle. Now we don't have to spend all of the time in the triangle either. We could end at any time. It is true, but we know we have to end within the next 20 minutes. So when it starts to become incapable of making patterns within the time that it has left, it can go into a dead zone in the middle of the triangle, and we might try to do that. I think that they're like I said, trying to put pressure on the pops and trying to put some pressure on the buying orders as well, or sorry, on the sellers as well when they dip down. But that tested the triangle itself now. Yeah, like it's interested in making that same kind of test on both sides, but we can see one thing that's different about this is it's got the 61, eh? The 61 is a pretty big deal. The 61 is right here. The gold dashed level, right? I'm gonna take them off because that's the only one I care about. But in this fib set, not in all of them, but in this one. And essentially, you can see the pressure being put on both sides of this triangle and making it even out of both sides of the triangle. Now, one thing that could make it pro consolidation and spike on either side, we do that a lot. It has to be allowed. Now, it can be contained within the entire environment. Any hedges that are already in are still exposed to its ability to be able to make this movement. And not much has to be done by anybody patiently waiting for their hedges to be knocked out with a move that can take us through the gold bar as it did yesterday. Now, what did we do yesterday? Because we had a gold bar, and you know that yesterday's gold bar was a different gold bar. Like it was like this one. Oh, I posted about it yesterday. Couldn't make it to the 188 or the 261. Reminds me of a pattern we saw yesterday. And it was all about getting to the gold bar. And I mean, And this is the deal with it from yesterday. I was like, every seller is about to be made into a buyer from what I can see. Negative response to the red yellow is common before breaking upwards. All of the downtrends were just fake breaks. Everything was bought out. Every single seller was turned into a buyer or a loser, and that's the reality of it. It's very very harsh, and same thing's gonna happen here. I think ultimately we have a consolidation that's had spikes out of both sides, and we're coming to an end of the need to come back to this node here. That's what we're ending. And the way that we're ending it is by putting a node on top of a range that we used to use. We used to use this range a long time ago. The green zone and red zone was an effective method of moving back and forth. Today it's anything but the same. What we are is contained in the middle of two areas that were able to trade very, very frequently. Now we moved between these areas up here very like we were in this zone for a long time. And we spent a lot of volume in all of those areas, moving from spending time here to spending time here and so on and so forth. And essentially that's left this area in the middle that doesn't have any ranges, basically a giant gap. We've put volume in that gap now. Have we put enough volume in the gap? Becomes the question. And when we're done with this area, can we be finished with the with this zone altogether? And we've basically put a giant node on the top of this on the top of this old range, and it just basically means that if we get on top of it of this node, it's just that much harder to get back beneath. We've got to get through this entire node. We've got to get through the entire node that used to be part of this move. So lately what we've been seeing is moves like this, where we get everybody rounded up, right? Stop them out, go to their target. We can do that plenty of times over. May have done this in here as well. Ranging from back and forth in the triangle has been one of the most effective moves for the market since the meeting, and there is something at 2:30. Same distance out of both sides. We have to watch for levels like this to become become attractive. Green dash level, that is. Now, of course, this one here I'm going to turn into a thick one because we have hit it, right? And first one, target's hitting. I don't care for 2 seconds what they say about their reports. The market moves a certain way all the time, and they can increase the volatility. It just means the movements are even easier to read, in my opinion. Return back to the triangle at the same distance out of both sides, a spike on the top, a spike on the bottom, exactly as it should. Any hedges, obviously can be managed as they were on there. If you were taking the short-term trades back to the lows, that's fine too. At the end of the day, it's clear movement. However you want to fit yourself into it is one thing. Clearly, as I say, I want to make sure that you're long by the end of it all. The last thing that I like to make sure that I mention is short-term targets for those that are interested in being long for the ultimate goal, which is getting through this entire environment with a safe stop and profit that's above the average price, or at least placed at the extreme, having taken some profit off. One of the two ways to make yourself safe. To continue holding exposure to what could come as a result of this report. And getting through the gold bar above. The gold bar above is very important. And wow, it's like if people didn't have it today, then they might have it now. Because at the end of the day, that gold bar, as I say, it was here from June. That's from June of this year. So it's an old one. And I'm like, is it because there's so many people unanimously understanding a resistance barrier from June that it decides to hold? I don't know. But rather people that were trading in June and having managed positions in June, you know, working the market since June, respecting the same levels on a daily basis, and the product of their previous work, is the way I see it. Because why would it so particularly come up to the level that we wanted it to, then come down to the level that we wanted to, then make it the same spike out of both sides, returning back to the triangle, and ultimately providing everyone that wanted to be long in this environment with a really tough time, but anybody that decided to hold because they understood this is part of it, and if you hedged it, then that's great. I mean, it's a bonus, right? Because you don't have to freak out about it coming back on you so much because you want it to go down. You don't want it to go down all the way though. You want it to go down a lot so that you can make money while you're waiting for it to go back up. But this low right here is not as good as this low, and neither of them are as good as yesterday's low. That's a fact. So, in time you'll come to realize this. And it's like holding those lows where they count means that next time it does one of these moves, you're going to be so far away that it's not going to affect you. And that's how simple it can be. But everybody decides to keep getting out. And that's the problem. And the market makes it really difficult when you try to value a position that's literally not at the daily extreme at all. Like it's contained within this move here, and it's contained within this move here, and it's contained within this move here. How many more moves are we going to be contained within? Because it's certainly not at the extreme of any of them. That's the reality of it. So it can't be considered the best trade because the best trade has already happened, because there already has been an extreme. So everything else that we decide to take from here on out is undeniably settling for less than what could have been had at the best. So I'm like, well, that's the way I see it. And you can develop a picky nature with it, which is good. It means you're not going to settle for anything that's not good for you, and that can be really healthy. It means you're identifying exactly what you want, and you go for that thing because it makes sense in the current environment, not because it's happened a million times and it's part of your strategy, but because it's appropriate for the current situation, and you find it to be a valuable way that you can place yourself amongst those moves in a safe and profitable way. So that's basically the only reason that anybody would want to take a trade. And it's like, it's surprising that, you know, why we why I find that that many people take trades. It's not because of a clear plan with a destination that makes sense. It's like the allure of it making some sort of kind of money for them that they will then later deal with when it gets there and see how it does by that time. And I'm like, well, that doesn't have what control is there? I'm like, there's no control, no plan, no direction, no destination, just hope. And that's you can't make a living on that, in my opinion. So it's very interesting. The exit of the triangle is incredibly near, as we have minutes till the tip. It means that any move that we make outside of the triangle will not be able to return back to the tip because there won't be one. And that is the reality of it. So what does it decide to do when it's done the consolidation? What it did before the consolidation? The last predominant trend, the last predominant resistance barrier? Could it be impacted again? Could we impact it differently, with it being the case that the report is somewhat, I guess you could say, underway, because they're going to have a meeting about it in 10 minutes or something, right? If not already. And I mean, that can create volatility too. It can create volatility when it ends the meeting, because now there's no risk that they can do anything because it's over. So that's like, okay, different environment now. Do we go back to the way that it was? Is there still a risk that it can affect the hedge fund's assets when it's over? So do they treat the market differently now that this obstruction is out of the way? So these things, I consider them 100%. I'll be watching. But they're all things that I'm trying to find as factual changes, not things that I would like to see happen or anything like that, because it would benefit me or whatnot, but because it would make sense from a technical standpoint, and it could be proven that this standpoint has been respected in other environments and can be related to this one because be, and there's a because every time, and that's your explanation. And like many other triangles in this case, we can see if we've spiked out of both sides, return to the middle, and continue to break the trend that we were originally breaking, except without half the people that were exposed to it the first time. I'd like to think. Because at the end of the day, that big move that comes down nearly to the beginning creates a lot of sellers, and basically all of them have been bought back out. It reminds me of any other 11 low zone. And you want to know what's interesting about this environment? Is that in the event that we go up out of it, is it not true that we move like this? Is it not true that it will be up then sideways? And that's something that we haven't seen before, right? Something that I was literally talking about yesterday. Let me find a picture. Where I wanted to see this move up then sideways. And we're going to get rid of its ability to continue doing this. And that will happen in association with the break of this gold bar and the exit of this area. But this comes to an end. And contrary to popular belief, because the higher that we go, the less we will see pullbacks. And the less there will be people trying to go short, ironically. But right now, the people that are going to design this environment, we wait for them all to short it and short it and short it and short it and short it. Because at the end of the day, most of the people that are long will end up selling in this environment too, because we give them a good profit, we take it away, give it back, take it away, give it back, take it away, give it back, take it away. They can't take it anymore. They just want the good one again. And the next time we go up there, we grind up there, and we give them all the time in the world to take their profit, and they'll fold, almost certainly. And then they won't be out of the way, then they will be out of the way for us to move freely beyond the highs, and that is what I expect. That is my expectation. I'll see. It doesn't mean give up any hedges, but it means take off enough profit to make sure that it's safe to continue holding them. In the event that it decides to make a continued spike down, you can make sure that you're safe to be part of that if your stop's dragged into a profit. You can be pretty aggressive about dragging your stop into profit on any hedges too. Because at the end of the day, it means you don't have to take off any on the core long position. You can keep your average price because you don't got to buy back into the middle like everyone else, and you certainly don't have to buy high like in here. And ironically, I find that that's what the least amount of people are going to be doing, because every single time anybody's tried to buy over the past couple of weeks, it's been pretty much coming back down, and many people will assume it to be doing the same thing here. The least thing that they will expect is that the sideways movement will continue into an upwards movement with absolute force against most of the people that have shorted it, squeezing them out and stopping them out and pushing us through the gold bar to get us to a new high. Absolutely insane. But let's watch. This is the way the market moves, and it's contrary to the public opinion. And they all think that what's happening right now is because of the movement of the report or whatnot. And honestly, the people that make these moves already know. They already know everything. So I'm just trying to be as in line with them as possible, and I can see clearly what they're doing. They're rallying the people up so that they can be short, and then they're trying to get everyone to put their stop at the high. Because when you go short, you're selling to try and buy it back lower so you can make money on the downwards movement. Now your stop loss is also going to be a buy order. And if you get 1,000 people to short it and not give them their target, but instead make them buy to get out of their positions, it can create a huge rally. That's what I think they're doing here, rounding them all up. Everybody's a big seller. Look at all that big red in there. Everybody's down. They're all losing money, and it's like, oh god, look at these huge candles coming against them. Who's doing that? Was it the public? Unlikely. What, buying so high? I don't think so. Instead, I think it's people's stops getting triggered into the next one. So it's like, we got a bunch of people down here and they've all shorted it. Now they put their stops in this clump, and when they get filled, the people that shorted it over here with their stops over here might create a chain reaction and shoot through both of them, and all of their stops get triggered at once. And as soon as people start chasing it, every single bit of that move has to come back, because nobody's allowed to jump on top of this move. If they're late for it, then they get overlapped in the future. This is the way of the market, and I strictly abide by these rules 100%. Because anybody that gets excited about buying in at the high deserves to get overlapped 100%, and that's the way that the market does it. Literally, anybody that comes in and explodes the market up like this, all of that movement gets to come back. Who's left? The people that found value in the little chop below that was hard to catch. Oh, it was too many lows. All of a sudden, those too many lows in that difficult environment turned into one of the biggest moves on the chart. Interesting that that's the case. What's this difficulty going to turn into? Pretty interesting. Chain reaction. They call it a squeeze. Honestly, it's a it is because the people that are short, right? They feel the pressure, like somebody's got it just really tight, and they're just hoping with everything that they have. They're like, oh, do I drag my stop up? They want you to. They're like, yeah, we're gonna give you a minute here. Don't get stopped out at $500 loss. Make it 700. Like just drag it up a little bit and make us even more money. That's what they're going for. They're like, put your stop in the gold bar. Put your stop in the gold bar, and then they'll get absolutely wrecked. And that's what I think that they're trying to do. They're trying to give everyone some time to drag their stops up so that they're a better chain reaction. That means that the institutions have to put less money in if everyone else is getting stopped out while it's going up. And look, this is just more people losing money. Stop, 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 stop as it goes up. This is a good spot to take some off too, by the way, because as they're getting screwed over, you can take some profit on this. At the end of the day, um, This is a beautiful move, and it's working exactly as it should. And the people that make this move are following the rules. Or maybe they're not getting squeezed. Maybe there's no institutions. Maybe it is the people that are doing this to each other. Maybe there's 500 people across the street from me right now that are battling with as advanced analysis as I have, and they're moving the market as precision. They're calling each other and they're saying everybody buy at the same time. We're going to knock them all out at once. And then all the other people are just getting smashed on Robinhood, and maybe that's what's happening. But I'm like, and Wall Street just doesn't have anything to do with it. Maybe that's the case. I find that so hard to believe. So hard to believe. But instead, I find it like the people in their very limited information, no brokerage actually tells you how to trade. They just give you the tools, and they're like, yeah, have fun with the 600-page manual. Everyone will read that, right? And it's like, oh geez, man. And I'm like, maybe if we make it more complicated, they'll try to trade more securities, and the less that they know, like let's make options sound attractive. They'll last weeks instead of months. It's like that's the case. And here we are, exactly as it is. And I'm like, I can't see it, but in a way that is absolutely brutal to the public. The composite man theory is in play here, I think. And it was something that was made clear to Wyckoff that the composite man theory. And I'm like, this is the way I see it as well. I'm as cynical as he was. I wouldn't be surprised if he talked about it the same way, in the sense that Wyckoff believed that the composite man was destined to work against every market participant, and essentially, unless you knew the game as they played it. This is the value. It's like, the people that were right had to endure it coming back this much and then back that much and then all the way back again. But anybody that decided to keep the stops at the extreme, anybody that decided to keep the yesterday's move, anybody that didn't fold in the sideways pressure because the momentum was going down, because this and that, the red yellow line remained the entire time. Not a single red yellow line was placed on the bottom. Not even a solid yellow line. I didn't even give it that. So here we are, new high day. And we must be aware of it trying to test these highs again. That will happen in the future. If it doesn't happen now, it'll happen later. So it means don't even attempt to drive your stop above that level, or you will get annihilated. Where do you get back in? I'm like, where do you get back in? It's like that's the thing. At the end of the day, we've made this move here now. It is absolutely successful. In every single regard, it managed to produce the same movement that we had when we were in here. And that's clear to me. Every single green dash line that I have plotted today has been hit. And I can't tell you how many, dozens probably. I can't tell you. Very, very interesting to me. But this is exactly how I see a short squeeze. Maybe I'm wrong, but I know exactly where the good money is. And if you're long, you know what team you're on. These people, they don't mess around. And it's not because the public's moving the market like this. I don't think it's because of the institutions. I find it very unrealistic to believe they're capable. But making sure, like, perfect hedge back down to the gold bar. If you manage to get any of that, make sure that you're making it safe, because they can come back and attack you pretty quickly. At the end of the day, keeping that core and making sure that you're hedged is really important. Like I say, when it gets down to those really critical hedge point reversal areas, you want to make sure you take your profit because it's aggressive. But at the end of the day, making sure that you keep an active management approach on the shorting side of things means you don't have to worry about where it's coming up from. You never have to be caught buying in the middle. You'll always be shorting from the extreme high. And that's the way it goes. And it's going to be hard. But you use less than half of your core, and you can really make some good money doing it.
You know, it's not like we could chop the crap out of this green zone. Like, what if we want to put a siege node here? Do you know that the gray zone used to be a gap? What do we want to? What if we want to put a zone in that? Like, remember how we put in the entire day's volume in between this area and in between this area? This was like a dark zone, right? It had nothing in it before. There was no range there, and we decided to put volume there. Well, we did that kind of here again, and you know, it's got like a little bit of a VWAP, like a half wave move, or yeah, like a half wave move, I guess you could say. A halfway move maybe could be on the table here. Like a little bit of a 50% on this move here is absolutely acceptable. So we got to watch out for that. Also, you know, God forbid that the range is going to be used, right? What if we do red zone to green zone in the process? At some point, using the extreme end of that green zone is likely to be on the table. So like that halfway point is a little bit of a, it stands out a little bit. And I'm like, that's fine. It could be considered negligible. Like it's fine. It's done now. Like that's it. And it's like, okay, that's fine. The halfway range move is something where it's like, okay, this could be a short-term target where you can make it safe to continue holding any of the hedge that you choose to keep, because it could come back on you by this point, because this might be all that it decides to give, but it's enough to make it safe. And if it goes back to the B points, you should have enough to be able to take some off there and continue making it safe. But expect it to come and stop you out. And when the hedge funds do this, when they get stopped out, they put their stops right at the extreme, and it helps fuel their assets from the bottom every time that their hedges get stopped out at the high. And then they're just adding to the people getting stopped out as well, and it's nice. But focusing on making sure, like this is another point where you want to make sure you take some off if you did get any exposure on the most recent uh, push up. Like I said, it just came back down to that B point right there. So that's beautiful. You know, like everything did come back down. Hedging, like I said, if you hedged it, you can still be in from the bottom, and you're not worried about where it's going to come up from. Like all the individuals, they want to trade in the middle for some reason. This is a good spot to take profit instead of trying to buy into a trade. So at the end of the day, we could see a spike back into this node up top here, just like a response of it, like something like a right shoulder even, but it might happen quickly. You know, like it's trying to work with it right now a little bit, but I'm not really feeling that short term move. Might be a little bit more of a long term thing. At the end of the day, 61% retracement could mean the B point up here. So we've got a little bit of a B point in that gold zone right there, something that, again, like a lot of the individuals are going to struggle with the buying back up to it and such, but if you did buy back up to it, make sure that it's safe at as soon as possible, because it's a risky environment and they're likely to chop the crap out of everyone. So be careful. Japan is hot here, and this is where most of the people have lost the most money today at this point right here, I think. And that's because it was a point that started the squeeze. Anybody that was part of the exciting push seemingly wiped out, but who's left? The people underneath the last trend. Why is this the case? At the end of the day, it pulled back predominantly to that trend, and we're at the tip of the triangle right now. This is the POC. Most of the people have been overlapped at this point. Hedging is really important because you end up with the extreme high. In the event that it wants to take out the bottom, then you've got something from the top. At the end of the day, if you just have something from the top, you want to look into hedging. Back to the high of this node is something of a consideration. The slower it is, the more disturbing it is. So we want to see it make like wicks and spikes that are relatively fast, and that POC is likely to be seen again in the future as well. The red line above the red yellow. The red yellow line is effectively still the downtrend. I don't think that that changes actually. So we're coming back to test that node. We just tested the red yellow line. We're just testing just under the POC. We're testing the POC's node. And honestly, it might even be the POC if I zoom out even more. Let's check out that change. No, it didn't get there all the way. Okay, it's fine. Still, the attempt, it's nothing of a right shoulder yet. Nothing of a longer term move has really been found. And of course, being part of the right shoulder's formation is never really a good trade. Like, think about it. Like when you're making this move right here, taking it from here is kind of cringe, right? So at the end of the day, it's always best to beware of environments like that. Now, little areas like this, we see they're very likely to try and get hit, so no stops for any hedges should be dragged beneath them. Like any short trades from the high, like I said, how important hedging is. In the event that that we can capture a major move like this, it does flush everyone out. You know, by the end of it, we'll be lucky to have maybe 40% of the market participants that were at the beginning of this consolidation still here, because they will be out of tune with the market. They will not be able to find a place in. They won't find a target to be able to target it so that they can be in. By the way, every single one of these targets has been hit. If you did take it, I mean, those targets are hit. I haven't put one up in a while, and the one that I have put up, it did get hit. Every single target that we've put on today has been hit. So it's beautiful. At the end of the day, it hasn't come back to get you. If you took profit on those targets right there, when did you sell the whole thing? I mean, you don't have to. You can keep your stop at the extreme, and you can wait and see what it does with the red yellow line. Find a hedge for it if you're not in on one already. So that's like the name of the game. You know, understanding we could be using the high of this node and getting back to this B point up here. I think that this is a B point up here, by the way, and it's never really been hit. So the value of fighting for that exposure is still relatively high. At the end of the day, could this be the more, you know, longer term construction of that right shoulder that we were looking at not too long ago, where we make that left, the head, and then the right shoulder as well? Something to really consider. I left these on because, you know, in extreme circumstances, we can use previous ranges that worked with absolute precision. It didn't manage to stretch down to any one of those significant levels, but I left it on there anyways. What it did do is it used this one. Totally. But at the end of the day, if anybody did find a hedge for that, this is where you would take profit on that hedge if you took one at the tip of the triangle. Just a halfway move, similar to what it did up top. And at the end of the day, why is it so important? Because at the end of the day, it makes a downtrend that literally can break and change a lot. I mean, is this a 5-wave move as well? Like, I mean, it's very crappy if it is, but effectively, it's made one downtrend. I know it wasn't the extreme. You could actually, yeah, you could say it was the extreme, and then it came back up. Second wave, third wave was the largest. Fourth wave, similar to the second, and what we're on now could be the fifth. Because is it not true that this is like the this one, give or take a little bit of that spike? It's very similar. And if you look at all the moves and all the components of all of those moves, what confinement area is most similar to this one? And you know, I would say that one. And I'm like, well, are they counter trend moves to this trend right here? Position between a third wave that's the largest? Interesting. Well, that's the same characteristics of when we have a 5-wave Elliott wave move. However, it is not that. It is like this. And I'm like, well, you know, what's funny about that and this is on both of them, I can draw this line. And we just broke that line. Does it have the same impact as an Elliott wave? I mean, you tell me. It is effectively reversing. So I'm like, well, it didn't make a new low. It didn't make 1, 2, 3, 4, and 5 like the textbook said. It made a crappy 1, 2, 3, 4, and 5. And you want to know what's really funny about that? Is I can take this over here and draw in 2
lines and show you really how similar these two patterns really are. When I do this, is it an M into a W, and do you even see the difference when in the 5-wave move when I do this, or are we just fixated on the fact that it's an M and a W now? Because at the end of the day, which one is the difference? Like if I like shuffled them around now back and forth and it was like, oh, which one was which? I mean, well, at the end of the day, this one, it looks crappy and everything like that. When I take it away, it's not the normal 5-wave move, but damn, is it ever like an M into a W when you consider the origins of why this is important? Because in both sequences, no matter what, if it is to create an M into a W, is it not true that this line has to form and break? Like this line right here, and this line right here. Now, it doesn't have to form and break well, but at the end of the day, we can see that it effectively is still potentially making the 4th wave. Just an interesting observation that that trend line still potentially is being constructed. Like, to the people that just sit down at the computer right now, will they ever draw the last one, or will they draw the new one? And how is this one any different to the one that I just drew? Now, the one that I just drew didn't really break very well, but guess what? At the end of the day, when we constructed this trend, how did we do it? We constructed this trend in a very particular way. It was by stepping on top of pullbacks, on top of pullbacks, on top of bigger pullbacks and bigger pullbacks. But then every single time we made an advancement, what happened inside of that? Every single time that we had to make a new high, did it not involve an incredible pullback back to almost where it began from before any kind of advancement? So is that not just the way of this trend? Now, what I want to point out is, why is it that in this environment that we have right here, that we continue to make new highs and we continue to make new lows, but they're not expanding to the downside like they are the upside? It's a fact that inside of this channel, we've only managed to expand 3 times down so far, and we're pushing the limit on the 4th time, but it doesn't match what we were capable of doing on the high. So it's not even right now. At the end of the day, we are coming back down to this original channel bar that we were using, and it's doing it on the 5th wave's trend. So just as it would have the same trend on any other 5-wave move, it's put at the same risk that it might break. And when it does break, it ends the trend. That's why it's so important to recognize a 5-wave move in the first place, is because when it finishes, things can change. So if things are subject to change, it means that anybody that's acquired a hedge trade wants to make sure that it's profitable, wants to make sure that it's protected, because things can change. And anybody that's not protected and just short wants to consider the hedge for themselves so that they can be in for the return to the B point. At the end of the day, it's important to understand these situations. A lot can be learned. After all, the big players are playing the game. You can see, they showed up. Everybody's here. All of the people that move the market are serious about advancing their assets in a particular way. And that's one thing that I can see about today. And as the risk that the report doesn't give us any kind of problem, or nobody's going to be flocking together because they think something's going to happen, or they think the interest rate decisions are going to affect the market in a certain way. It's like, no, it's all happening here, and it's all clear it's all going to be bought back out, and that the name of the game is to end the day long. That might be hard, but not so hard if you focus on making sure that your stop is profitable at the extreme. And every time that it gets a really nice high, you focus on trading it down so you can make money on it. Instead of losing your exposure, you make money on the pullback, and everybody else panics and sells. At the end of the day, we've got a B point here. No stops are safe above it. At the end of the day, we've also got a 61 that we just ran into. Make sure that we're aware of that 61 and the capability of it. The 61 could lead to another 61. The 61 could be a point that we could propel off of. I think that this 61 inevitably will bite the dust. It's just a matter of time, regardless of its initial response or its response that it wants to have another time. It's it's not going to matter. I think we're getting through it. Doesn't matter. At the end of the day, we've got this trend. Remember this trend? I said that this trend would break like crap, and I dimmed it out because I didn't want to give it the full respect that it usually would have. I wanted it to seem, crappy, and it was. Effectively, we've managed to. You know what this trend line is good for? It's good for making the same distances on both sides. And we've managed to do that with a final touch at the 61 here. We've cleared this B point out, and the only one that remains is one above. Now the thing is we don't actually have to go above this line to get to it if we take this much time. So what could take that much time? Could we fit a right shoulder in there? It becomes an interesting question because I'm like, well, how many times today have we managed to make a head and shoulders that doesn't have an inverse? I mean, because that would be one for you. And if it doesn't have an inverse, then it probably failed. That's the interesting part about it. So unless the head and shoulders is good for making an inverse that probably goes up after, the head and shoulders itself is likely to fail. Pausing at the right shoulder and even leading people onto the neckline can add more people to squeeze. And that's what we're in for here. We're in for another squeeze, except with half the amount of people and twice the amount of institution interest. But like, a lot of people, they say they don't like volatility. And, what is the price of understanding the volatility? What is the price of finding comfort in the movement? So that movements don't have to create fearful emotions and uncertainty. Because, like I believe that those feelings that I believe almost everybody that gets into trading is inevitably going to feel at some point. Um, there, it's like you can't go on feeling terrible every day, like or worrying every day. It's like, I mean, that's just a recipe for illness, right? So it's the only way to change that is to have an understanding, and that's like it's the same as in like uh like in math class, I suppose you could say, because there's something that we can do. We have the opportunity to analyze a situation and create a projection for what we expect that situation to result in, and then we can find a way that we can manage a position throughout that situation profitably. Um, and uh, and it's all part of a plan that's intended. Because if it's not intended and you're lucky, how are you supposed to maintain that for a long period of time? Or have we not like learned by even in video games or something, like when you're playing chance or something, it's like you're not going to win forever. And I mean, I think it's important for everyone to learn that. I don't condone gambling or anything like that, but everybody has to understand that you got to roll the dice enough in a game or something to be able to see that you're not going to be able to command your luck. And some people, you would question because it's like they think that they can command their luck, and not for 2 seconds do I think that that's something. I think that's crazy. So what you can choose to do is act only on things that you find certain, which means you might. Oh, here's the target, by the way. All green dash lines have been removed yet again. Every single one. We do have some from an eternity ago up here, but they're not from today. They're long-term B points. I guess we did talk about them in the morning, but I didn't plot them today. Another squeeze inbound. Everybody that was a seller is now a buyer, or They are panicking. But the green zone, the almighty green zone, how do we make it into green zones? Do we need to put this under siege? Was there really such a big consolidation in this little area that created such a big node that we can't get through it? I'm like, I don't think it'll hold for long. They're gonna get through it. And I think that the people that are making this move are impatient. They're more impatient than I am. So we're gonna see this move a little bit sooner rather than later. Some kind of node can be placed on there, but obviously there's a little B point down here too. You want to make sure no stops are dragged above that in the event that you've taken any short-term positions. We do have to be aware that, our wacky 5-wave move pattern did in fact work out. And is this not the same thing in reverse? How many waves do we have here? At the end of the day, they're all wacky for sure, and this is part of a squeeze. But one thing about that is, like I explained on the last one, we can draw a trend that otherwise wouldn't be possible without a 5th wave. So now with that trend, the distance that we have in time to get to that trend becomes very important. If we don't have time to respond to any particular level, then it could force a trend break. A trend break could lead to the B points. The B points could mean testing the 61 from the other side. It's best that they hastily move on before sellers find the support attractive. They keep it far away enough from the trend. They can do it pretty decently. But I'm like, you know what? It's better that they readjust the trend, honestly. And so looking for a hedge trade is not a bad idea, but it's going to be quick and sharp. Like when you go up, 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 and it's steep, right? Okay, you can go like this, right? And that inevitably does readjust the trend. That's one way. Takes a lot of time, right? But you end up going from a 71 degrees, right? You see that there, to, whoops, to 43 degrees. Now, is it not true that making a quick spike down and returning back to the high can create a similar kind of environment and reduce the trend from 70 to 50, let's say, with a quick spike, but except it leaves a bunch of space. And that could be attractive. I mean, we're looking at two options to do relatively the same thing. By the end of it all, we readjust the support line and we rival the highs again. Just like I said with the gold bar, we conquered it. Now it's a support. Well, we haven't used it much as a support. We've only hit it once as a support, and then it fell through it. That's not very good. What about actually using it as a support? Well, when we used it as a support last time, how much did we come down to do it? Well, that looks suspiciously particular to how much we had to come up before reversing. Could we make that move again? And what would that look like? Becomes an interesting question. And I'm like, that distance looks like it is the distance of the range. Why is that the case? So I'm curious about that as well. A distance that shows itself, undeniably could be considered in future analysis, and perhaps we're interested in seeing that distance right here. Unbelievable that they're keeping this trend though. You know whose team you're on. This is hardcore. It is a 5th wave, by the way, though, so we have to keep that in mind. That even though it bought some time, that time that it did buy is uh, it's very likely to be part of wicks and spikes. So making sure that you're aware that it can come back down to these other highs here and so on are really important. Now I know we're right up knocking on the door of some long-term B points here, and that's the name of the game right now. So is it not true that we've made 3 highs? We go 1, 2, and 3. Now remember what happened last time we did that? It was like 1, 2, and 3, and it was like smash all the way back down to the first of the 3. And then could we do that again here? 1, 2, and 3, smash all the way back to the first of the 3? Because that would be the the gold zone. Not a single long trade stop is high, is safe above that. Not until we turn this into a support. It's possible that this can be neglected. But is it probable? I'm like, I don't want to test it, because it could cost you your position and offer you nothing back but the middle. So that's a terrible thing, right? So like why would you lose the position just because it's going to come back to the middle? Instead, focus on finding exposure for the break of the trend, which can be difficult, like I said, as it's fighting against the grain. But if you use less than half of your core, that means you have to lose twice at the same level. And how many moves have happened at the same level that allow you to that allow you to lose money twice on it? Because I only see really moves happening once at each level. And if you're only focusing on shorting against the move, I mean, if you lose money on one of these moves, you don't really have much time to take a second go at it. And you can see the value in protecting it almost instantly as soon as it forms these levels. Now these levels right here that I'm plotting in, they don't have to get hit today. I'm dimming them out. These levels, they this level it is subject to getting hit though. Of course, these other major B points are now erased, and anybody that decided to keep the long trade going is absolutely laughing. And remember what I said about up then sideways. Is it not true that we went up then sideways and then left going to the high, through the high? We didn't manage to do the big spike down. I guess you could consider this here, but I mean, like, at no time did it really manage to break beneath the preliminary support of the entire consolidation. Because you could say, just like in a Wyckoff, we started out with a preliminary support. Okay, this is upside down. Let me find a normal one. A preliminary support, right? And then that level led into a push and a dump and a push. And that forged the confines of the entire range, right? So it was a push and a dump and a push, and it pretty much stayed within the confines of that range the entire day. Set up like it usually does, with the support and resistance lines being the high and low of the range constructed within phase A. Phase A, which is typically accurate, phase B, which is typically boring and brutal, phase C, which is typically controversial, and phase C is when it's basically done. Phase E, you better have exposure or there's no trade really to be part of. And essentially that's how I've come to understand that as well. It helps with the understanding of the phases associating with it with something that it does in that. So now we can see that we're breaking the trend. Of course, that we ran into a blue line up there as well. That was a level that otherwise was controversial in the past, provided a resistance barrier um, and prevented us from getting to a target of some sort in the past. Now, of course, like I mentioned, this target is very likely to get hit throughout the day, and we're basically there. Do not allow the trade to become a loss if you targeted it. At the end of the day, it's risky to fight against the trend. After all, you know who you're fighting against. It's the people that move the market like this. Like they know exactly what they're doing. They brought it up into this range, and all of the positioning that they made throughout the AMD earnings, and all of the accumulation that they did throughout the other earnings in the recent month, they've accumulated it all. Yet, they've slowly been grinding off of the ground while everyone thinks it's a terribly bearish environment full of risky upcoming events. Now all of a sudden we can see it's made incredible advancements on those that found value in that risky environment down below, because it was at a relatively intermediate term extreme. Like, it was at an hourly extreme. you know, and like it wasn't at the daily extreme or whatnot. It was in the middle or what and so on. But it is true that that provided even more risk. But it's not like the institutions are long from only there. So they wouldn't be very good. They wouldn't be very up if they weren't. You know, the people that are the most up are the people that have been holding the longest with the most. And those are also the people that are projected for the most profit. So it becomes how what is the best way of being able to acquire the most and manage the most and keep the most and profit the most, and having a monopoly is illegal. Don't forget. But you can own all the companies. And I'm like, well, that's interesting. The people that run the companies are getting crap for being a monopoly, but yet they could be owned by the same person and their competitors, so they can have exposure to the entire sector. And I'm like, well, that's what happens if somebody's acquired so much money that they've been buying and buying and buying. It's like next Sunday, you manage to pull off a successful hedge. Where do you put the money? Into more assets, buy more stuff, manage more. And at the end of the day, what's your position going to look like? Your position is going to look like exposure to the entire marketplace. That's what it's going to look like if you're doing it right. And you're going to have to manage that. And what a better way to do it than to trade derivatives that give you exposure against the major moves that can happen against the market on the whole. Of course, you could be selective about your weighting in certain sectors and such. If you own all the companies, you'll get information from all of them that can make you weight it accordingly, which is illegal, but I'm sure it's done every day. And at the end of the day, very clear that these practices are in play on a daily basis. And I'm like, where's the individual fit in? I'm like, they're used for accumulation, from what I can see. They round everyone up, stop them out, make their positions, and then come tomorrow morning once they've moved at a far distance with low volume area, while nobody's here because they've all been eliminated, and essentially the big move that we were expecting by the beginning of the day literally is continuing, and everybody else that's tried to jump in on the halfway mark has had a really tough time because it keeps coming back on them, and it's a remarkable thing to have the guts to hold through such an event, to have the strategy to be able to profit on a move against your position while you're waiting for this event to pass and continue profiting your core position. How many people in the world are doing that? It's like, makes you think. And I also want to point out one thing here too. Remember how we spent the time in between these consolidations? Now we're doing the same thing here. At the end of the day, we used to trade here and we used to trade here. Where are we right now? We're in between both of those levels. Are we going to do that here as well? Because that's another range up there. Used to use this range. They're all slightly, these two, okay, sorry. These two ranges are exactly the same. I duplicated them because they were used. They were both used. Yeah, that's all I can say. They were both used, and I'm like, that's fine. Under no circumstances are any long trade stops safe above this B point. I don't even care if it goes all the way up to here. Still not safe to drag stops above that point. Honestly, even if it hits it from now, it's still not safe to drag stops above it. Even having hit it, it can hit it again. It's not. It's not. That's a white dash line. That means that every single person that was caught selling beneath that white dash line has been bought back out by the time that we hit it. Don't be surprised if it seems like they shut the robots off by the time it hits that level. There's another one that's a little bit higher. 15,000 actually. And it's not because it's 15,000 that I marked it there. That's the irony. I marked it there and then realized it was 15,000. So, interestingly enough, 15,000 is a very strong target. And remember one thing, 15K, I said yesterday, I think the value of keeping the long could be to get to 15K and above on the Nasdaq index. So, yeah. Yeah, if I had to do it again, not much I would change. I wouldn't change a single post I've made, that's for sure. At the end of the day, everything is happening as it should because it's supposed to happen a certain way, or else I wouldn't be able to say it's supposed to be this way. I wouldn't be able to have that much consistency if it wasn't supposed to move this way. You know, it would move another way sometimes. But it's like we don't come to 2 + 2 = 4 in a different way every time we calculate it. You know, it's literally the way it should be done, and we understand it. You know, we don't need to learn it a different way. You know, to come to the same conclusion. I mean, I guess you could maybe. I don't know, but at the end of the day, it's not necessary. But you can go through different lengths to explain something like that in different ways, and ultimately it only needs to be understood in one. And what's the point of understanding it? Well, like the whole act of understanding it and the whole need to know the calculation, because it gives you what, a result, and you demand a result, being told that, hey, this is the way that you're supposed to calculate this from a mathematical standpoint, you know, with no emotion, with no belief. Because if you add any emotion into the mathematical equation, like, why would anybody feel that unless they didn't know what they were doing? Like, it can be stressful if somebody's like, hey, you know, I'm going to teach you, you know, like long division or something like that, and you don't know, and it's like, well, if you leave part of it out or you forget part of it, you know, it could create stress. But if you have an easy way to understand, and you can look back at it and you can say, okay, what was that again? How do I do this part again? You know, am I right with the understanding of how this is supposed to be calculated? Is really is the question. And like everything that I do is based off of that same logic. So it's quite intriguing. And Power Hour is the next major event to come up. Of course, the event, the best thing that could happen was for it to end, as the market agrees. You know, with everything that it did surrounding that event, they managed to keep the volume as tight as possible. They were buying into where people were selling and selling to where people were buying until they until they got that control back. As soon as they got that control back, we saw that they were back on track with the profiting of the assets towards the white dash line. And that was after they managed to overlap everyone else that had the same idea, interestingly enough. Now, remember what I said about that most recent green dash line? We have to be careful about it trying to jab towards it. It doesn't have to be very good at getting it initially, but ultimately it is likely to end up back at it, so no stops are safe above it. However, it can be a tough hedge point or hedge profit target. As you know, there can be many attempts to get back to it, yet some may get very close and not all the way. It's best to just make it safe when possible.
Maybe head and shoulders up there.
Yeah, exactly. Yeah, totally. Yeah, we could see like that right shoulder forming, and it's almost like it's coming for like a little B point there. The low of this last candle in there almost. And it's like halfway through, they've got a little B point in there as well. Could be hit, doesn't really matter, but it's just a very small, negligible kind of movement.
and contained within the right shoulder. And I'm skeptical of its ability to even play out. It might form, but I'm like, what I see more necessarily here is a grind. Like it likes to work the range. So far, I was thinking about it maybe making that N that we see in phase A all the time. I'm like, is it phase A? It could be phase A. And that could mean a whole Wyckoff. But the right shoulder looks like it's coming down to the neckline there a little bit. Where if you look really closely to that left, this could be a right of an inverse, which is really weird on the 15 second. Curious to see if it even cares about that. It looks like it does. For what it's worth, the size of the pattern, I guess it's playing out almost halfway of its existence, which is almost like nothing on the 1 minute, but it's giving me heavy tip of the triangle vibe. Because when we get into this like head and shoulders and it moves like that, it's like it's got a triangle. I mean, that's like what we're doing kind of right now in a weird way. And I just don't trust them as far as I can throw them. Like I said, you know what it's good for? It's good for coming into an inverse. And remember, that's a bullish pattern. I'm like, well, unless the inverse head and shoulders fails after this, it's like it's going to fail. And I'm like, well, and you know what's funny is every bit that it fails can come back to the middle too. I'm like, it's just a huge pointless thing that ends up just looking like a consolidation. And I'm like, okay, that I guess it's an appropriate time of day to have that. Remember how the day started? It was like it ran up and then it started coasting sideways, right? Out of that sideways movement, we went up again. Could we do that? Because it's already shown itself. I expected it to happen, I think, yesterday, but it still did the pullback. And I was like, okay, well, I knew it was close to that area. I just gotta open this window here. It's kind of sweaty. The idea that we get to the grind that we had at the beginning of the day, almost like a smaller version of the entire day happening at the end of the day. And like, could that happen? I mean, it's only been happening like 65% of the time. I'm like a little bit more than you could expect it, kind of thing. I'm like, at the end of the day, if that happens, it really doesn't change much. If it keeps going up, that's fine. I find that holding through the sideways movement is necessary, anyways. If you find hedges throughout the pullbacks, just make sure that you aggressively take profit. The depending on how much profit you've already acquired determines how aggressive you could really be. But generally speaking, it's been pretty unsafe to fight against the trends overall. And if you have given up your position to fight against the trend, it's almost become near impossible to get that safety back of being able to put your stop at the extreme. Because where's that? It's not on the chart. You know what I mean? So I'm like, well, that's a tough reality too, right? Because it is true. It's a fact. It's not my opinion. Like as much as anyone would want it, trying to acquire a position right now as safely as one acquired from the extreme and kept is not as it's not remotely as safe. And I think that we will continue to see decent moves against the core position, which will all end up being bought back out. And at the end of the day, focusing on hedging those is key, and most of them can be small, crappy moves that come back to stop you out nearly right away. But because the candles aren't that small, you can manage to fit your stop in to most of the moves. You can manage to take some off most of the time, you know, and that's the key. One of them, to the key chain that's required on a day like today.
So we're squeezing the people of the right shoulder. Good time to mark the imbalance. Squeezing, squeezing. Definitely made a 3 drives pattern. I'm like, how does a head and shoulders fail if we don't make if we make 3 drives patterns? Because I'm like, effectively making this move right here means that we've got 1, 2, and 3, just like we do across these highs right now. Yet, why is it that the head and shoulders is that much more popular than the 3 drives pattern? You know, it's like somebody forgot to update Google. And it's like it seems to be very limited, so that, you know, when they can move the market in a very, very specific manner, they do it around the fact that everybody else is considering certain specific things, which are all seemingly on the cheat sheet and under heavy attack by new strategic methods, like ones that get us back to the white dash lines, the ones that allow us to be in from major pullbacks or expanding triangles, where we can see, like, days like today, everything is trying to make that kind of expansion, where now we've continued to make 3 more expansions to the upside, having not made another one to the downside. Interestingly enough, what that does give us is something like a rising wedge pattern. We do have to be aware that that pattern has been failing to do what it has done notoriously for decades in this year and the last. And then it becomes a question of, we know that the average person would never choose to make something fail that's otherwise working for them. Like when you look outside and you say, oh, this person has this strategy, that person has that strategy. Why would somebody wake up one day and say, I'm going to change everything? This isn't going to work anymore. I haven't seen it not work. I just decide it's going to change. But you can assume that people wouldn't do that. So they stay the same. And when the market changes, it affects them negatively. And they assume that a pattern like this is supposed to go down always. Let's see what happens to the people that trade from this point. I find that this point right here is it going to be a point that we come back to in the future. Like in the future, we will allow them to get just this price back. That's how it's going to be. And they'll be lucky if they even get it. It might be just a little bit above too, which is kind of harsher, you know, but it's really squeezing them out. They're going to go for their accounts here, it looks like. And let me dim this one out again like I did last time, because that's how I feel about it. And, you know, type in rising wedge to Google and tell me this isn't that pattern. Why is it going onto the top? Rising wedge pattern, right? Confined within 2 lines, both going upwards, both going upwards, both going upwards, and it goes down, right? It's supposed to go down, down. You can look through 10 pages, right? But what this one's supposed to do is actually go sideways and then go up. So we shall see. Any kind of movement that can be captured in that sideways movement could be literally this range right here. Back to the first of the 3 is the green zone. So a great hedge profit target. But then it may decide to contain itself within this range before going to the white dash line above, where ultimately it could seem like they turned the robots off. This is part of the move that I think actually is gonna, like, it's like when I see a head and shoulders, right? And it does this. It's like, all right, head and shoulders going left shoulder, head, and then we go all the way to this point, and then it goes down to here and then fails. I mean, like, doesn't even break the neckline. It just gets to it. So anybody that's like, oh, I've missed it, they're just like, boom, extra wrong. Like, that's how we make 3 drives patterns. That's how we make. And boom. That's what happened. So that's the idea. And at the end of the day, we've got other major B points that are down here too that I'm sure we're responding to their fibs. The 161's been probably the one fib of the day that's been the most important in this expanding triangle. But I remember that was how much we expanded out of this in the morning. We went up to a 161. Oh, hold on. That was a 161. Anyways, when I remembered that was a 161, this one was also a 161. So I saw that it went from a 161 to a 161, and it all started doing 161s all over the place. And we saw that when it went from this level here, I don't know, I can't remember if that was a 161 as well. No, it was 188. But still, I do recall it being an important level that was capable of it creating another 161. That's my recollection of that. Now, ironically, you want to know where that 161 is now? It's below us, as this one will be in the future. Ironically, we do have a B point at this 161. It's an old B point. Comes from way back. But under no circumstances has it tried to come back to this level. And that is a level where I would say it's quite controversial as it stands out as one of the most major B points in the area. You know, it's not a W, ironically, whatsoever. That B point, there's nothing W about it, which is impressive, really, considering that the B point was so much higher than the X point, something that typically wouldn't be the case. You know, typically we would get that W to look a little bit better. Now, I suppose you could say that the rising wedge just goes back farther, and it just is bigger. I'm like, well, that doesn't change anything about the tip, so that's fine. It just means it was going back. It's been considered for longer, and it means that every single person that's been associated with this top line, and anybody that's been, you know, a seller, has effectively had a really tough time being exposed to the break of the support line, because the break of the support line has only ever been this. So God forbid you drag your stop within its ability to make that move, right? It wouldn't make much sense, because if it does it so often, whenever it makes a high, it must be allowed to make that move. When we get to a high that's otherwise significantly appropriate for it to make that move, hedging is really important. But when we're suspected to go sideways for so long as well, making sure that it's protected relatively quickly, like I said, is really important. You know, levels like the green zone can work to the red zone. I mean, it did, you know, and that's what happened. And those ranges are really old too. They're not they're not from today. They're not even from this week, last week, the week before that. In fact, the newest range on here is this one, and it's from the week before last. These are older. This is old. You can see the difference in some of the newer ones. Now I like to make sure that I can see the average counter trend move clearly, and sometimes I'll leave it here, and that's because it's meant to be important, and at the end of the day, it's like I don't many people will look at the chart and they'll think, oh, there's so much going on and everything like that. I only consider one thing at a time, and I'm usually talking about it. So it's like at the end of the day, um, we take one thing at a time and compile those things into a collection that gives us an understanding of the situation. Simple as that. You can either accept it or neglect it. As I say, that's the way that I look at the analysis. And if there's too much analysis so that I can't see other analysis, then I change the chart and I go and I work on it so that I can see it clearly and separately. But from what I can see, there's plenty of analysis for each level that it does respond to, and that's exactly the way that I like to see it. Everything that is controversial that it does run into, it uses, and that's the way to have it. But like I said, it's supposed to go sideways. If there was like some sort of method of determining its ability to contain itself within this area, I would say that like the imbalance is the elephant in the room right now. That things can happen in anticipation of the imbalance as we get closer to it, as less than half an hour remains uh, till the close. And of course, the imbalance is at 350, marked with a blue dash line. And today, I look at PayPal, Roku, Qualcomm, but I don't think that there's going to be any crazy runs. So, however, tomorrow, 2nd, we have Apple at 4:30, which is huge. Square, SQ, DraftKings, Carvana, Coinbase, um, Paramount. Yeah, on the journey to the white dash line and the levels above. At the end of the day, um, tomorrow brings a very interesting earnings report. Apple holds a very large part in the Nasdaq index, and getting their earnings out of the way will be huge. Let's take a look at them. So I was looking at this chart before, how it can make, a an S wave out of all of this. I can see that right now it's actually poised to try and break this downtrend. I can see one thing very clearly on Apple, that they look like a 5-wave move. I mean, they have 5 waves, undeniably. That is 5, and that puts a lot of stress because this trend undeniably does form on these highs, and it's not my opinion either. Like it is there. It does exist now. So I'm like, I use that to my advantage. I know I can't argue that that exists. I have to live with it, right? At the end of the day, it's a trend that until broken, it is the trend, unarguably, right? So it's like, okay, so maybe getting close to that trend is the first step in breaking it. Getting to the trend and breaking it could change everything that we've done inside of the trend and go for any B points that there have been or any targets that there have been along the way. So it's really important to understand that. Now, of course, we can readjust this trend. I think this is going to be like an 11 high zone where essentially these people here, they had a rising wedge too. These people here, they also have a rising wedge. But it didn't work for these people. and it worked less for the people next, and interesting. Because the trend still comes from the same spot. Like people sitting down at the computer right now and just seeing that will draw this in as the same way, most of them having not realized what's just happened to the last person. It's very, very interesting. A method of squeezing. One that I found familiar with on the daily. Maybe even the weekly, actually. No analysis on there. Like this kind of environment where it's like, everybody can see that, you could put a rising wedge on that, here and here and here and here. And I'm like, okay, yeah, I've been here before, ladies and gentlemen, and here and here. I mean, when's the rising wedge gonna freaking play out, right? Because it's not playing out. At the end of the day, didn't play out here, but it still was a rising wedge by here. And like all it decides to do is make another one and make another one. And I'm like, it did it here too. It's just a never ending process of making a bearish pattern. And you want to know what's funny? Is while it was doing that, every single day it would play this pattern out. Like this would be the beginning of the day here, right? And then it would play it out. This would be the whole day. And then this would be the end of it. And it would end right here. By the morning it would be back up doing the same process again, making the same rising wedge on the daily. It's like if you do fine if you traded the rising wedges during the day, but if you ever tried to take a rising wedge on the daily, I mean, it's or the weekly, it's very much the case that it didn't play out to predominant B points. It didn't, like for a lot of the time, it strayed away for pretty drastic distance. In this case, you can see that it went right to the 188-200 and came right back down. And when it came right back down, it looked like it came back down to a 61. Or maybe a bit past it. Still, 10 minutes till the imbalance.
Hey, I gotta take off, John, but I appreciate you, brother.
Yeah, man. Take it easy.
Heck yeah, catch you tomorrow, man.
Yeah, man. See ya. Yeah, basically we're at the journey to the white dash line. Contrary to popular belief, people will see momentum fading off. It's not bearish though. But everything gets affected negatively the more that it coasts here, and the more that it doesn't actually produce the result of what it's showing. It makes me question. Let's look at the daily real quick again here, but I'm looking at something else. Like in this environment here, would you say that regardless of what the candles are doing, right? Would you say that the momentum is building? I would. I would say that we're continuously making an effort at turning things around in the upwards direction, having made an effort at increasing the the um, the angle. It's very, very slight, but at the end of the day, I think that we're seeing a little bit of increase there overall. Not on these major lows now, I guess, but the orange line, we're definitely seeing some change there. And what's funny about that though is there's such a drastic difference between the lows on the actual price. And in this case, to not have that drastic difference, but to actually, be equal or increasing is quite an interesting divergence. Now, of course, with the end of the day today, we finished quite significantly back up in the daily range. So a lot of trends have broken that have otherwise been keeping us back for quite some time, and ultimately, I think we've just created another trend that, contrary to popular belief, is the most important trend in the world right now, which is ridiculous because it's like the idea that we've just broken this big bad uptrend that's part of a rising wedge is going to profit so many people that are bearish on it. Why would it go and break this line? The audacity. It'll affect so many people negatively, though. They all short in the rising wedge. Yet, watch it move contrary to popular belief, stopping them out. Google at 11, 20, how many pages of rising wedges showing us it does one thing and yet it does another. Interesting. I call that an audacity line because it has the audacity to break instead of the big one. Instead of the one that's literally designed to break and play out the bearish pattern. You want to know what it's interested in doing right now? It's this. And it's done that in a really crappy way in there. Absolutely popped out of the top, sideways, popped out of the bottom. This is a way that it can manage to do this. And what it ends up, what is this? What is the purpose of this? This is what we see when we do this too. And the purpose of it is to contain everyone inside of this area here. And throughout that process, like we get this movement, like it's very much the same sequence as what we would have in this movement. Like it's the same kind of thing, right? We just add a little bit of a difference, but everything crosses through the middle the most, and everything that gets out of the middle comes back to the middle as quickly as it left it. No, is that not part of the schematic for this plan? Because in my recollection, I can see it exactly as that way. And sometimes when we do this, we can see that it even leaves with the same move that it came in. And when it does that, it is doing 5. And when it does 5, it puts a lot of stress on the support. Until we get one of these bad boys. Because they're ridiculous. I mean, they hurt people. They're terrible lines. And I mean, unless you know about them, they're a danger to you, right? So that's the way that I look at that. And it's important to understand that they're necessary to break. And if we form one, it can involve patience or persistence, right? Becomes part of the table if you want the opportunity, right? That's the situation. And in this case, it's again making people patient and persistent for something that I think isn't even going to happen. Because like this major move right here, right? We went all the way up, and then it went sideways, right? And then we went up again. Basically the exact same move that we did actually, which is kind of strange, that we did at the bottom. We did the same kind of move. Like where my box begins is this move right here. And we've done that here. Could we do the rest? Of course we could. That would put us at what? The 227? A level that we've seen how many times today already? Could we see it again? One more time. And now, at the end of the day, we don't have much time. But of course, I do believe that we'll see the white dash line, and it can seem like the robots have been turned off at that level. Honestly, it seems like they've been turned off here, but one more strive to that level. You want to know what I think they'll do? If they get into trouble for buying past that line, they will try and make it so that people put their stops there. That's the best way to do it. People are getting squeezed out of it, then we can actually push past that level without having to put our own money into the market. Because other people in their stops will actually fuel us through that level. So that's the best plan for anybody that's actually formulated this move. What a better plan could they have than to continue profiting on the assets that they've acquired? And when there is a risk, then to make sure that you have a hedge. And that's maintaining control, demanding results, having expectations that lead to positions that profit because that is, their expectations essentially, the results. But what we have now is like a head and shoulders 3 minutes before the imbalance. An imbalance is like a reconciliation of shares at the end of the day, basically, that can create volatility on a minute by minute basis, where we literally are released with a report at the beginning of the day, the end of the day, and then at this time. This time is really important because a lot of the people can actually trade it. The volatility isn't increased because it's the open or the close, but it's 10 minutes before the close. And an interesting imbalance that can give us an idea into what the close could look like potentially, based off of the volatility that it gives. And typically it's terrible. It doesn't do anything, but it can. And on a day where things are actually interesting in terms of movement and news and stuff, they're not just a dead range. And you can tell that the big players are here. Could it be a day that we have a good imbalance? Maybe. Worth watching, I'd say. For what it's worth, 2 minutes that remain. And I'm like, do they make it so that they hit the white dash line on the imbalance, a sign of control, that they have control of the imbalance, and that they have bought everything up to a specific point by the end of the day? Very interesting. But that specific point may be the white dash line. Of course, just past it, we have a 188.200, but that's inside of my range. You want to know what's funny about that range right there? This purple zone right here, that purple zone used to be a 188.200. But it was a 188.200 that wanted it to go back up. Like, the 188 was on the top and the 200 was on the bottom to go back up. Now it's exactly the opposite. Not exactly, but the 200 is on the top where it was on the bottom before. Strange to me, but whatever. The 261 is I'm interested in it because it's the 261, but 30 seconds remain until the imbalance, so beware of an increase in volatility on the next candle in the 1 minute. As it has been slow, see it potentially double in size, the candle at least. Maybe triple. At the end of the day, was this trend break a success? And how many times will it have to break before nobody will try it anymore? Because it did, it broke here, broke here, 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 and here, and then here. Well, as what? What are we doing now? Terrible. Reminds me of the daily, like I said. Imbalance is terrible too, which is fine. But at the end of the day, we're dealing with a little trend break, and that's the same trend from the bottom, and the only trend that can break to get us back to the 100. Everybody the imbalance dump is likely to be bought back up to, but it is true that everything outside of this range has been a wick and spike back to the range. Is it not true? Nothing has been able to spike beyond. Yeah, it's honestly a lot like that one. But that's one way to use a range. It reminds me of another one down here. Is it not true that we use this range in a weird way? I mean, we didn't really use it at all in the way that it was originally used. It was used very well. It went back and forth very well in order for it to be able to be as defined as it was. Now, we come back to it many days, many weeks later, and we use it like this. We barely use it. We don't go back and forth between this range at all. Nobody would even think it was a range if they didn't have it from another time. Now the interesting thing is they would put a range in here. And there was a range in there today. That just so happened to be in between other older ranges. And I understand that. But I can see that that's done here too. It is not true that we didn't spend any time in this range either. What did we do in this range? If not, just make, oh my goodness, it's the same thing that it did before. Look, 1, 2, 3, 4, 5. And then we're grinding the red zone, are we not? And then we go to this here. And I'm like, well, 1, 2 on the green zone, 3, 4 in the red zone, 5. And then we grind the red zone, right? So we did that. We did that here. I moved that over there. And then I take what we do right now. And I move it over here. We look at them both. And we have 5 waves. The first one is on the green zone. The second one's on the red zone. The 5th wave ends into a sideways channel. Why are all the components there? It is a fact that it is a smaller version of what it's done today. The components are all there. Everything from the 5-wave move into the grind. Everything from the first response on the green zone to the red zone second response. Look up here. On our 5-wave move, is it not true that the first response was to the green zone? The second response was to the red zone. The 5th response started the channel on top of the red zone. Interesting that old channels of the similar age are used in a similar way back, clearly, we run right through the big node that there used to be there and sit right on top of it. Because that's what we've been doing. We've been running through the big node that's here. First, we tried to run through it. Look what happened. It smashed right into it. Couldn't handle it. Had to come all the way back down, try again. And when we did, we conquered it. We stepped on top of it and turned it into what? A support. And then we moved on it exactly the same way through this channel that we did the first one. An observation. Let's check out AMD. AMD, another huge push into today. If anybody acquired AMD, remember what I said yesterday about AMD at the close and the beginning of the day today. First off, the first thing that we saw in AMD was that AMD literally just hit a 188.200. I had marked before the report at a gold zone. I made it a gold zone, okay? And then that's just before the report. 415 was the release. And then through every single one of those green dash lines, it tanked all the way down, straight off of that gold bar, right? Straight off of that gold bar that we had on this other chart. Just marked it. And then, I said a bounce on AMD, I'd say, from that point right there. And then, literally, wow, what a bounce on AMD. Straight back up into that range. All of that was erased into a green bar. And then it came down, and I was like, watch for the entire dump to get erased on AMD. And then I said, may take some time, but the Nasdaq should follow also. So we were looking at them both being erased entirely, all of that movement. Then you can see the morning comes around, they both went up. And then from that point, I mean, AMD's never seen that low again. You held from yesterday, you got exposure. It's huge. making a new high on the Nasdaq. Isn't it interesting that their sideways movement is leading to the white dashed line of all places instead of the rising wedge being able to play out? Terrible. So, very interesting. Contrary to popular belief, the public and their patterns fail again. So we have to be aware of why and exactly how that's going to happen tomorrow. Because tomorrow is going to be Apple earnings, even more movement than what we could have on today. A huge move on Apple's earnings, as a matter of fact. We could see hundreds of points on the Nasdaq depending on how it goes. That's going to be really important. Now, I can't help but notice another thing. We were talking about this kind of pattern earlier. Now, like, look at what it's doing right here. Is it not true that we've went sideways and we spiked out of the bottom of a range that's otherwise in the middle, and we spiked out of the top, same kind of way, and we're doing basically that. Basically. Of course, with a couple minutes remaining to the close, there's a few earnings reports after the close today, but I don't think they're going to be too impactful, to be honest. Not with tomorrow's earnings.
Interesting way to end the day. Right at the high.
Yeah, right at the white dash line almost too. I find that's very intriguing. And they managed to do that same pattern and grind it there, which I think is very strange. The idea that, you know, we've taken the necessary 78% pullback that we've done so much of, or the 61% pullbacks, and we've changed it into an environment like this, where effectively we can go up very heavily sideways and then go up again. It's not like we won't see this again. We definitely will. But it's gonna be on our understanding that we can be part of it. That's the major thing is understanding when it changes, and you know, this pattern, it's likely to actually work tomorrow. It's going to have a completely different result. I think that we're going to see rising wedges actually play out all the way down to the 61%. But today, it's a completely different ball game. Hedges overnight are likely to be able to profit at that B point as well. They just don't want to give the public a chance to be able to profit there. But this is the close. So essentially, with this being the end of the day, I'm very curious to see what happens overnight and how Apple's positioned in the morning. But hopefully, you guys have a wonderful night, and I'll catch you guys later. I'll keep you posted throughout the night.
Bye, guys.
Yeah, take it easy. Have a good one.